Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HOMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey everybody, welcome, good morning everybody. Thanks for joining. My name is Ronnie at SST, my partner is Dave. Welcome guys, bright and early, it's 3 a.m. Eastern. London market is just opening up, so thanks for joining everybody. I welcome you, everybody on Zoom. Good morning, thank you for joining everyone. Welcome Sarah, Russell, Hassan, Rami, Mo, welcome guys. Thank you for everyone on Discord for joining as well. I know it's very early in the morning, but I thank you guys for joining. Guys, I just wrote to you. If some of you guys have already signed up for the signals and having some issues, send us an email, please. Stocksnipertrading@gmail.com. We're doing site maintenance right now. We apologize for the inconvenience. We didn't think it was going to take this long, but we can get you. We can get admin take care of you manually. So just bear with us. Be patient. I know that there's some of you guys that are still waiting, signed up yesterday. But just give us an email and then we'll have admin look at it and we'll get you guys set up. So we apologize for this, but I assure you nothing is wrong. It's just we're going through some site maintenance right now, okay? Right now, guys, the markets are opening up. This is live London. And so let's get started, guys. Let's look into what we're going to do is look into the news. We're going to look into doing top-down analysis on US30, DAX, gold, oil, and GBP USD. And today, guys, it's a big day. It's a big day in the markets. Okay, we've got red folder news in Wall Street. We have FOMC at 2 p.m. Eastern, which is a really big deal this week. It's midweek Wednesday, and it's FOMC. And then tomorrow we have Apple with earnings in the after hours. And then finally we end the week with another big day. It's NFP, which is unemployment numbers at the first Friday of every single month. So we are in a new month of May. So let's see how we continue to trade today. Yesterday was a big day in the markets, as you could imagine if you were trading. So what we're going to do in our top down, we'll continue to review what happened yesterday, and we'll get back into it. Okay. And then over here, guys, if you're not familiar with this is Bookmap. It's a live liquidity platform. This is the depth of market, and so I will have this running right now. It's in 15-minute time slices over here: 2:15, 2:30, 2:45, 3 a.m. So this is London's market. market opened, it dipped all the way down, it picked up all the bids, and we're kind of coming right back up to here. That's why you have like a red candle coming down, then a green candle coming back down. See right over here where DAX came all the way down red, picked up that big wick, and now it's coming all the way back up. So we'll have this running. I'm going to go change it to the 5-minute time slices right over here, so then you can see maybe follow it on every 5 minutes. So here's 2:45, 2:50, 2:55, 3 a.m. and then 3:05 right now is going to come up in a couple minutes. Okay, so let's get ready. Let's get started. All links for everything we have, guys, are on our descriptions and everything like that. So if you're looking to join Bookmap, use our code. You can get a little bit of a promotion and things like that. So everything is under the descriptions, guys. Okay, so let's get started. Let's start to look at Forex Factory. Okay, and again, there's plenty of financial websites that you can go to look at any news in the market that's coming through. We prefer Forex Factory. It's nice, clean, easy to follow, but there's Financial Juice, there's FX Street, there's Bloomberg, there's investors.com. Like there's so many websites that you can look at. And Forex Factory is not the greatest. It's not the best, but it's free. It's quick. You can look at it. What we're kind of looking for are the high impact folders. Well, myself personally, I'm looking for high impact, big red folders throughout the day, because that's where the big volatility is going to come into the market. So what we're looking at is right now, this is our session, 4 a.m. We're going to trade into this. So we have some European low impact yellow folders, Italian monthly unemployment rates. Then at 8:50, then that's about it for London that we can see on Forex Factory. You might have another platform that shows you a little bit more news, but this is what we have for Forex Factory. Then it gets into 8:15 Wall Street open down in here. So this will be in our private Zoom over here with myself. So right after this session, I take a little bit of a break, and then we pop right back into Wall Street on Zoom, and we start over here with ADP non-farm employment change. Okay, this has to continue with the NFP this week, and then we have ISM services at 10 a.m. So this is a big folder as well. Then this will be our live FOMC. I'll be doing this one myself too with all the snipers. We're going to start it at 1 p.m. and we're going to go till 3 p.m. Eastern for 2 hours. So this is a big one. 2 p.m. FOMC statement. Federal funds rate. So they're already predicting an increase of 0.25%. We'll see if they actually increase 0.25% and what they talk about going forward in the next month. So are they going to pause or hike going forward, or are they going to kind of decrease? Maybe they decrease 0.25%. I can't see that happening, but I can also see maybe a pause or no change where they're predicting, and maybe they keep it at 5%, no change. That will impact the markets as well. We'll see. And then this is where we have the conference call at 2:30. This is where they all talk over here, and we have the conference call, and we can get some guidance as to what they're going to do for the next month. And so lots of volatility at this time as well. Then you go into 3-4 p.m. at the end of the day. That's called power hour, and that's the last hour of trading for the US stock market. Okay, so that's our news, what we have on deck. Let's go to our charts now. So thanks for joining, everybody. I appreciate it. Already 130 viewers, guys. If you can hit that like button, subscribe, hit the notifications, that really does help Dave and I out and all of SST. We want to grow this channel, and we want to provide free education and free trading and free analysis for everybody around the world, and it really does help us out. So thank you. And next week we might be changing up. I'm testing things out on YouTube to see engagement, to see views, to see everything. The week prior we did live London. It was kind of very, very slow that time, so now we moved it into London. Next week we might do something else, but the Wall Street is always going to be for members only. But what I might be doing is some post New York on YouTube and things like that in the afternoon, and see the engagement and go from there. But we're very flexible at SST. We like to test out the markets throughout the day and see where the most engagement is. Okay, so please hit the notifications so you get notified whenever myself or Dave goes live on YouTube. Okay, so let's get started with US30. I can already see right now, like I can see how it pulled back up to this VWAP and continued to push down. So you can see how it was like a 3-bar play, and red continuing. DAX is breaking down. You guys can be in sells right now collecting the pips. I see Wes already got 1 for 1. He's already 15 pips ahead of the game. Good for you, Wes. Way to get that grab. This guys on Bookmap is over here is the heat map. Okay, you can see the heat, and this is the depth of market with bids and offers, and I'll explain this a little more as we go along, but if you're a little confused as to what's going on, don't worry about it. It's not easy to follow all of this. So sorry guys, let me just hit one record button right here, and we're
Recording
good to
in
go. So
progress.
I'm going to start with US30. Okay, so I go through like a certain routine I have daily, just like when I get up in the morning, I wash my face, I brush my teeth, I have a coffee, and it's just like daily routine. Now I continue, like I look at the Forex Factory, I look at the news. That's part of my daily routine. I've done that, got that out of the way. This is London Market Open. We're opening up with some volatility. You guys should all know that 3 a.m. Eastern always should open up with volatility. Okay, so make sure you guys know the securities you guys are trading. Get familiar with the session times so you're not surprised as to what's going on. And you see how now all of these offers, all the supply is taking out most of all these bids down here. So we're coming down with high volume on this candle, and the market is really pushing down in the first 5 minutes of London Market Open. So let's go to the daily and really get an analysis of if, and also guys, if you are trading, if you're in trades, please manage your trades to the best of your ability. Don't over leverage, don't over risk. There's lots of trading throughout this day. You don't need to go all in right now. There's a lot of trading throughout the day. So just I'll be doing top-down analysis. I know that I'm going to miss some trades. I know that there's going to be some beautiful setups, but it's important to do a top-down analysis no matter what time you're doing it. So like we couldn't just get into trading, but it's not what we do here. So I don't want to kind of teach the bad habits. What we'll do is we'll do specifically one webinar on how to teach you how to trade without top-down analysis, and that will be that topic. Okay, so right away what I want to do is I want to look at my high and low of the day. So I use a purple line, high wick, and we've got a ignited full body. That's our low. So how has it been trading? Okay, well, last week we had Tuesday and Wednesday bearish days. And then Thursday, we came up with a nice big bullish day, almost engulfed these two bearish days. We opened up on Friday, we were bearish, we came down, retracement, nice healthy retracement right back to Wednesday's high right here. And then we continued to push up. We took out Thursday's high and we continued with some higher highs for the week. So we broke this big area of resistance to the left of the chart, and we ended up with a higher high on Monday, and then we got rejected and we closed near right at the low. And then yesterday we opened and we came up bullish, but we got rejected in London. Do you remember when they pinned it in London yesterday? And I said to you guys, that could be the high of the day when we got pinned in London. And then we were doing our top-down analysis and we said, can we come down 50% of this candle around 33,900? It broke. Where was the next level? Coming down to the bodies here, 33,000, just below 800. It broke. Where was the next level? We identified this level with all the wicks. It broke. Where else could it have come down to? Maybe 50% of this green candle is right there. We had that identified, and we also had the bottom of here was the extreme low where we had that big green box. But you can also see if you had one more line, like kind of at these bodies or right here where we had it, you can see that yesterday we almost came all the way down in there and it bounced. And then we had the SST signals in the Discord that caught the bottom, the double bottom bounce near the end of the day and continued to push up. So yesterday was a sell day all day. Okay, so hopefully a lot of our snipers in the Zoom, you guys are learning that if it's a sell day or a bearish day, you stay on the sell side. Only scalp pullbacks, buys for get those pips and dip out of the market because they might be very small pullbacks, dead cat bounces, and then they continue to drop. The only buy we looked at was near the end of the day where we had the volume come into a higher time frame demand. And do you guys see yesterday the RSI on the 5 minutes went down to like 5, went down to 6, went down to 7, and the market was still dropping and dropping and dropping. So that's why sometimes you cannot use RSI indicators or any indicator for the matter to take trades, because volume, when it's coming down heavy, it doesn't care what your RSI indicator is reading. That indicator traps a lot of retail traders and gets them in trouble. Okay, so that's why you got to use critical zones in your trading. Okay, supply demand zones on higher time frames. And then we pushed up and then we closed here, and today we opened with a bullish ignited candle. We came up, made our high, we just got rejected. So now if we continue moving to the upside, where could we go today? Remember, today is a big day. We've got a lot of news coming in New York. We have also FOMC at 2 p.m. Eastern. So if we're continuing to drive up bullish, again, I'm just looking at critical levels to the left of the chart. And if we can see if we can fill up green up here. And finally, that's it. That's where the volume is closed, like right up here, 34,120. Then above that, I'm going to draw a big red box above here because this is the supply. There's supply up here. If we ever do come back up here, maybe we come back up and it maybe gets rejected and comes back down. It's like a double top. If it breaks out bullish, excuse me, then we're going to come up to our weekly high, which we opened Monday right up there. And if it goes higher, you look to the left of the chart, and then you come over here, and then you start to look at all of this price action to the left of the chart, right over here. I can get very conservative. I can start to put it right at this wick, 33,340. 34,340, I'm sorry. It's early in the morning for me. I stayed up late, guys. I stayed up till the third quarter watching the Lakers game, so it's a late day for me. I'm very limited sleep. It's very hard for me to go to bed when there's some really good NBA playoff games. I'm a big NBA fan. That was the Lakers Golden State game, so it was a big game, guys. LeBron pulled it out. Okay, so now what happens if we have a bearish day? So we have now all upside momentum marked. What happens if we get rejected? We only come up to maybe 50%, or right here. Let's say it's pinned right now. In New York, again, they pin it, and then they start to take out these buyers, they exhaust these buyers, and we break our low of the day, and we continue to push down. We're going to push down to possibly levels, guys, okay? So right here, wick, a body, this level, 33,515. And if we continue to push down, maybe we will target yesterday's low, 34,417, come down into this area. If we break yesterday's low, guess what? The market is going to continue to go down bearish, and it's possibly going to push down to body, this critical area. Then I've got a wick and all of these wicks. So when we have all of these wicks below this critical bodies, right there, right there, right there, right there, I'm going to make this a local demand area on the higher time frame. So I draw a big green box because again today we may come down into here and it could get a wick and bounce back up. But if it comes down with more selling pressure, we might break right through here, break this low, and where are we coming down to? 50% of this big green candle on Friday, March 31st. This was our month-end candle. So I automatically assume 50%, which is half of that candle right there, okay? I'm eyeballing half. And you might say, Ron, that's not half, but to me that looks like half. I smoked a big joint this morning, and to me that looks like that's half of that, okay? And then if I look to the left of the chart, I see perfectly now how it's lined up with that wick and that body and that body, okay? So I didn't just, this is half. I looked at right there, and then now when I get confirmation, I put it in a pretty good spot. For a guy that smoked a big joint right now, it's in a good spot right there. Right here, right here, and right here. And if we continue to look, if it's going to go bearish, where are we going to come down to? Possibly, okay, right here, we have bodies and you have a wick. So, and then it's at a psychological area as well, just below 33,000. So that's a big area. So I can continue to chart all down over here, but that's good enough. That's more than enough. Right now the volume is over here. We've done enough on the daily. Okay, that's more than enough. We don't need to add more lines. That's enough. We've covered all angles, and this is static, so you can use this throughout the day. That's what typically I do. After this call, I keep the charts, and then I just come back and I just trade the 5-minute volume at these charts, and I just clean up the charts. We do some housekeeping next session, and we just clean it up. So let's go into the 1 hour now. Okay, so some traders go into the 4 hour. I personally go into the 1 hour. You see the big move coming right back up. So we picked up all the bids down here, and we're testing the high, and we're coming right back up on US30. Okay, so I can see that they're picking up a lot of bids in London coming down. Here was the big break yesterday, okay? They're going to get a lot of volatility at 8, 9, 10 a.m. This is Wall Street. Here we go, guys, okay? Big breakouts coming up. We're going to possibly hit this yellow line that was previous resistance all the way over here. This is why I marked this yellow line. This was at 215 and 230. And look at, we're coming all the way right back up to maybe take out this high and continue bullish. It could come up here and get rejected. These offers will get activated and it might pull down to pick up some more bids in here. But this looks like a big inverse head and shoulder pattern forming to break out to the upside on US 30. So the hourly candles, we had a big bearish day come all the way down. Look at when we bottomed out right there, 11 a.m. And then this is where we started to see the double bottom, and then we had a signal to come take it back up. Look at where it came up to. Look at where we are. So that's about half right there. So we're just above half of this huge bearish candle. It is trending a little bit higher highs, higher lows on the bottom. Okay, so we found a bottom. And now what we're looking for is to break our daily high, and then look at the imbalance we have. Okay, from the purple to the yellow. That was our high of the day. That's our next daily area. But in between here, like if I want, I can cut it in half right there with a white line. Let me try that and show you. Okay, I could cut it right in half right here with a white line to show me that this is halfway point. Yep, we're very bullish. I can see the big bullish hourly candle. This was London Open. We came down, we picked up the liquidity, and now we're shooting right back up. Okay. And we're going to break out of here. So when I look to the left of the chart, does this white line line up with anything? I got the body to bodies. What I can do is I could lower it just a little lower, and now catch those wicks in the body. See that? So I just lowered it by 2 pips. I was eyeballing 50% in here, and now I made it really, really accurate with the high there, and right at body to body. So I've covered 50% of this zone, and it could break out to that hourly resistance and get rejected. If we break above here, we're going to come out to the next daily, and then my next big hourly support level, resistance level is right over here. Body to body, and kind of almost 50% of this candle. Okay, right now it could bounce up. We'll find where there's that resistance, and maybe it's going to pull back unless it's going to continue to drive. So what we need to find is in here. You see where all of this consolidated hourly candles are? It's all in here. So if I bring this to the left of the chart, this is the big area where volume could come in here, and again, and just barcode come in here and just trade sideways. So we found like a neutral area of consolidation. Okay, on the hourly. And right now we're pushing up, we're still holding. Where's good hourly support in the market right now? This level, right over here. Okay, our London low got respected right here at 33,700, and it got respected with this candle right here at 2100, and we're about 50% above this big body candle, and we're still holding this area. So we're going to see if we can continue to break out. We might consolidate in here, or we're going to push and flush down below here. Okay, so I'm going to go into the 5 minutes now to see how this whole thing is moving. So this is what I mean. Yesterday was a huge sell day. You sell. Pullbacks, you get pip and dip and you get out and continue to sell all the way down. And this is roughly where we had some signals come in the market for buy side. This is the double bottom, and then this is the rest of the day where it started to continue to push up, pullbacks, then higher highs. And this is where we're at trading right now. So it's right back into here. This is where we were trading. 3 o'clock it opened bearish. We made that bottom. That's now our hourly support, and now we're pushing up. So what we're trying to do currently in the market, I'm going to get rid of this like consolidated box for you guys so it doesn't confuse you guys, but I want to show you on the hourly that is a big area. So our high of the day, you can see we're trying to break the purple line. It's got a couple impulses, but we really haven't broke this area. So I'm going to place like a red box above here to give us a heads up that this is a supply area. Could push down unless we can break and close above it. So if we do that, if we can break, close above, and maybe retest this level, maybe with a pullback, then maybe we can continue to target that white line. Remember, that was that hourly white line. Okay, and if we can break above there, we might be heading up to our daily area. Now for pullbacks. Okay, where can a pullback happen in the market? A pullback can happen 50% of this big candle if I'm eyeballing it again right over here. If I want to get more like the pivots in the market, right here, you see where we pulled back, it held right here, pushed back up. This red candle came down, red, but pushed up, so it kind of respected this area. It came down again here, red, held, like look at where it closed, then we opened, there was the break, came up, then we really pushed down and kind of were again above this red line. So what we're going to do is we're going to see if we can hold this area as some support going forward. We're going to take London market open as an impulse liquidity grab to the low. Well, they came down, they swept the pending orders down here because this time you got 305, 310, and then back up. So maybe what I'm going to do for consolidation is this entire range right in here. This is where we might trade sideways now for a little bit until we get our next move. And maybe if we continue to break to come down, we may test our hourly support. That could be a double bottom and it could bounce, or it could break and we're going to go to the downside. So if we're looking for sells, we could be looking for a potential sell below here to the white line. Okay, again, this is where I get the tool, measure the move. From here to here, it's roughly 20 pips. Minus your spread, your slippage, you can still maybe grab 10-15 pips on a move if it starts to come down. But it could come down, and then what could happen is it comes down and there's that double bottom, and it could go right back up and do something like this. Okay, so if you're an aggressive scalper, we could take that trade for 10, 15, 20 pips down there, but we have to respect this white line because it could just have like a break like that, an impulse, and go right back up. If it breaks and it closes and rejects this white line, and then we can get into a further push to sell the market back down. If you don't feel comfortable, like if this is too small of a zone for you, wait below here for the double bottom break. Okay, because this will, you see over here, the hourly, it got held right there, and it came and it got held right there. So if you don't feel comfortable with that first little setup that I showed you, then what you can do is, if you're a more conservative trader, you can wait below here for that potential break down here and push down for the daily low, back down to that purple line. Okay, so I just want to let you guys know, okay, that some traders, scalpers, like to trade in here. Other conservative traders are back down below here. Okay, and then trading in here, we'll let it accumulate and maybe it will break out to the upside again and we can continue with some highs. So looking at London, it was a false break to the downside. They scooped up that liquidity, came right back in. We might be trading in here, but bulls are still holding in control. We're above the VWAP right now, so we could be breaking out for those highs and taking out all of these offers above us. But what we want to see is we want to see like an impulse candle breakthrough here. We want to see it close above there, maybe potentially retest this area and then move up. Then we can potentially get into a buy. It might take a couple times, it needs to retest here, and then we're looking for the move to come up to that white line and maybe a little further. Maybe it consolidates here as well, and then maybe we're pushing up there. Okay, and just what I do is I measure my moves. Every single trade I take, I measure it. So I know the maximum move up to that hourly resistance is roughly 35 to 40 pips. Okay, half the move is 20 pips. So you gotta know, guys, you gotta know exactly what you're looking for in these markets. Otherwise, you're making trading very difficult for yourself. Okay, do we all get that, guys? In YouTube, yes, or yeah, why, or whatever, just put in there, just so I know that you guys understand what I'm talking about. Guys in Zoom, you guys know all about this, but maybe these guys on YouTube, it could be new to you guys. You know, you've never seen this type of analysis. I know it's foreign for a lot of people, they've never seen this before, but I assure you, once you start to understand this, it's going to simplify your trading, guys, honestly. Okay, good. So now I'm going to continue, guys. We're going to look at DAX. Okay, DAX is the German stock market. This is for the Wiener Schnitzels, and this is, sorry guys if I just butchered that German. I'm not German, but we do have some German traders in the group, so if I butchered that, I'm sorry. It's early in the morning, so I'm just trying to make some jokes over here. But let's get serious about DAX. It's this is a pretty good security to trade in London. Oh, Austria. I'm sorry. Is it Austrian? Wow, Wes, 4 for 4 already. You scalped that market again, 67 pips. Good for you, man. That's awesome. Okay, so what did DAX do? Like, we can just see on the 5 minutes right now. Like, if we wanted to just join right now in DAX and get in the volume and just start trading without any top down, I can see, like, we can all see, it's not rocket science. London market broke down, came up, picked up liquidity, and we could be breaking out for some upside momentum, or it can get rejected and come back down here. We can all see that. Hopefully you guys can see that all as well in here. But I have no idea what's above me, what's below me, where this thing traded yesterday, where it traded last week. So you don't need to spend an entire day on top-down analysis. 5 minutes. I tend to talk a lot because I explain a little bit more what's going on. But if I was just doing this by myself, I wouldn't be, explaining all of that stuff. So I can do like a top-down in 2-3 minutes. All I'm looking at is I can see it's been consolidating for the last 2 weeks in here. It's ranging, but now the volume is starting to pick up. You can see the range of the candles are starting to get a little bit bigger than these ones over here. If I really look to the left of the chart, we are at some serious area over here of resistance. I can see right over here, January 14, 2022, and even over here, August of 2021. You can see here, this was resistance, didn't break above here. This was a shoulder here, didn't break above, and look at where we came up to, right up there, and got rejected. These were the like double tops up here, the breakouts, but if we're continuing to go bullish, we'll mark those areas. But right now we have to follow what's going on here. If we can't hold, like, look at how close we're getting to these support wicks. If we break these FOMC, market could collapse all the way down into here, and we'll see more and more bearish momentum coming in the markets. Okay, so now, again, yesterday was a bearish day. I'm sure we all seen that. We'll see it on the hourly, how bearish it was. So our high of the day, it's right up here. 15,810 is our daily high. So I do, again, a purple line up here. And we have a low of the day, 15,730. Okay, so, and then your range. Okay, it's simple math. 730 and 810 is 80 pip range if you're trading inside the range. That's how much pips there is to be made in here, up and down. Other critical areas, okay, the purple to the purple, the volume will move up and down in here. Other critical levels are right here. This is a very critical level. And what do I mean by critical? This is where a body closed. This is where a retest, big red candle, came down right to that line and went right back up. Here's a body. It's a critical line. Here's a candle that came down to that purple line and bounced right back up. So there's a lot of activity, a lot of transactions happening at 15,760 in the market on DAX. So I replace it with a yellow line to make this a critical daily level that we might be trading today. It may come down bearish and come down to this yellow line and hold and go back up. Some type of volume will happen, some type of transactions will happen at this yellow line. I can guarantee you that today. I don't normally guarantee stuff, but I can guarantee you price action comes down to this yellow line. There's going to be something that happens here because we can see in the past how it reacted at this level. So if we continue to come up bullish and break our high of the day, let's just go logical areas where we could move up the ladder up here. Okay, maybe we push up to this wick. We've got a wick right there. I can lower it too. Okay, remember, this is all personal preference. Some trader will say to me, Ron, why didn't you hit that body right there? You absolutely can. There's no right or wrong. As long as you get some critical areas, you're all good. You can place it at those 2 wicks if you like. Let's keep it there. The 2 wicks. I'm looking at this wick, and that body. It's good enough. And then let's go for our next logical area. Maybe up here. I've got a body. I can lift it a little higher and catch that body right there too. So I've got a body. Good enough. We're not going to argue for where to place these lines. We're not going to say, Ron, you should have put it here. Give or take. It's an area, okay? Plus or minus 5 pips, 10 pips. But just understand that these are critical areas. We're not going to get into it. Ron, why didn't you place it like right here where I'm putting it? A wick, and then cutting through those wicks. Some traders can say, Ron, why didn't you put it at that wick? Why didn't you put it at that wick? Why didn't you put it at that wick? It's all just personal preference, guys. What I'm saying is just pick a critical area right there. That's a good area. I've cut through a lot of those wicks, and then we have another critical one. Anytime you got body-to-body continuations, I always target these ones first. And then above us, do we have any volume above us? No, we don't. So then this is where I put the big red box to let me know on the daily, if it's coming up here, okay, we got to know something up here because the market got rejected hard up here. So for example, today, let's say this is a big bullish candle, breaking this yellow line, breaking this yellow line, breaking this yellow line. We're coming up like a bullish engulfing candle, almost engulfing this entire bar. There's going to be a reaction in here. It'll either break out bullish with that momentum and tap yesterday's high, or it's going to get rejected with like a lower high right here, or in this red box. Maybe like our 5 minutes are extremely, they're up 75, 80, 85 on RSI. There's bearish divergence. We've got this big candle coming up here to the higher time frame supply. That's where maybe we could look to scalp sell the market coming back down. Okay, so we watch how it reacts at these bigger zones. And then below us here too, if we come down and we break our low, we're going to come down to these wicks down in here. Right over here, this wick, that wick, that wick, a little bit less than half that body. And then below this area, this is what I have as like a demand area. It may come down here and bounce right back up. Maybe FOMC comes all the way down here, and with momentum we break and we drop, and we can see DAX maybe fall down into here, 15,600 levels. So like right over here, and we may push down into 15,550 area. Okay, so that's good enough for downside momentum and daily analysis of DAX. So what can we see? Yesterday we opened, we made a higher high, so that's important for bulls. We broke 16,000. Now we're just maybe pulling back, picking up more liquidity to go back up here. But a lot of volume to the downside. We came back into this daily demand. It bounced at the end of the day. We closed right here. How did they open? They gapped it down. See the gap down? Came down. We made our low of the day. Picked up those bids, and now we're coming right up to the high of the day. 50% of the candle is kind of right up here, so in between like this yellow line and this yellow line. So we're coming up right now. Let's check the hourly. Okay, so the hourly gives us more information now. So what I did was I dissected that daily candle, those daily candles now into 60-minute candles. So now you can see the big moves in the market. You can see where the volatility always is every single day. 2 a.m. was us yesterday, pre-London. London came up. You see where I told you they spiked it? That's where it came up in London and they spiked it. And that's it. That's the big FU candle. Okay, guys, if you're familiar with the FU candle, that's what it is. The market maker said FU to all those retailers that bought the high, and they moved it all the way down into this local demand area. Look at every single time hourly candles came down here, they bounced. They came down here, they bounced. Came down here, they bounce. Why would they not want to come down here again and bounce? These are pending buys that want to get filled at this fair value area. It's a very nice area to get filled. So they got filled, and then we rotated right back up for Wall Street, New York session, coming all the way up, and then we kind of closed in here. Here's the Asian session, very slow, not the best to trade. And what happened with this big candle? 3 a.m. Tuesday, yesterday, again, they spiked it. Remember when I said they spiked it up here? And again, they pushed the market down. I said, guys, if this is London's high, it's going to be a bearish day. And it was. There was a small pullback right here. There was a pullback, 6, 7, 8 a.m. And then we opened out Wall Street. We continued to push all the way down. And look at what happened. It came all the way back down into this area. And this is where we had our alerts to buy the double bottom down here on the lower time frames. It was on US30, not on DAX, but DAX similar, even NASDAQ was very similar. And now we're pushing up. Look at now what they did with London. They opened, they came all the way down, so they pinned the low down here, and now they're pushing it up near a bullish pin bar candle, trying to close above this critical purple high, and maybe we can continue with some bullish momentum. Okay. So we're in a positive trend moving higher. Here's the low. This is a higher low. This is a higher low. So essentially we picked up those bids and we're coming right back up. You can see like over here where they came down, they picked up the bids, and now we're not breaking that yellow line on US30. So that's that big area we're trying to break. So now it's just accumulating in here at the VWAP in the yellow line. If it can't hold, if it breaks this yellow line, we're going to continue to come back down here. And see, I can already see the heat right here. See 33,810, there's already 18 bids waiting to get triggered. If it can't hold here, here's our other bids in the market. You can see the heat, 33,801. Nice psychological number. There's 14 bids waiting in the market, and then that could be our low. So what I also do with the lows is I locate the lows with that yellow line, just so I know if it holds or breaks where the market can go. Okay, so this to me looks like an inverted head and shoulder. Left shoulder, inverted head. We're kind of consolidating on the right shoulder. If we pick up enough volume, enough bids, we could possibly break out of here. Okay, so let's go to the 5 minutes. Okay, so lots of volatility in London. See when the market opens up, see how slow it is, like going in, and then all of a sudden 250, they really start to open it up, and then 305, we came down there, lows, it's kind of V bottom recovery, so we're coming right back up to here. Now we're going to see if this 5 minute candles can start to close above that daily spin top. So this candle open bullish, back down bearish, buyers are bringing it up, sellers are bringing it down, it might close right in the middle. So that's like an indecision candle, but right now we have 1:30 still left on it. We'll see if buyers can push it up. Look at the imbalance we've kind of filled. So this was the big break at the daily. So I like to identify this area, okay, right there, like that was demand in the market. Then it broke. So now if I bring this zone across, like right over here, it could be supply in the market. Okay, just by looking at the left of the chart. Okay, and if we do break out of here, where could we go? See, we'll transact in all of this volume. This is where the auction is. This is like if you follow auction theory. How many of you guys have heard of auction theory trading? Have you guys heard of that? Big fancy words? Auction theory. Anyone in Zoom? Have you guys heard of auction theory? That's essentially what we're trading. We're trading an auction, guys. No? You guys haven't really? Florian? Hassan? No? Okay, so we'll do some webinars on auction theory. I'll have those coming up, but we'll explain what auction theory is. Okay, so you see how I located like that red box at that daily? If we do break, maybe we come up into here, that red line. Why did I get that red line? Why did I place it there? Because you see the market, how it pivoted, where it came down and bounced above there. Here it broke below, we retested, it dropped again. Here was a little impulse break and then continued to drop down. Okay, so that gives me some targets above if I'm looking to buy the market. So if I'm looking to buy DAX, I would like to buy it where it's closing above here and retesting. And maybe I can move it up to that red line and maybe up to that daily. Those are targets, okay? If we get ready to maybe possibly short this thing, I look at this big candle, 315. It's a very, very important candle. It's a 15-minute candle, and it's also the first 15-minute candle of London. So normally I'm always looking at half of it, like right there. But I can see two like wicks. That was like the pullbacks held right there. So I can see that there is and even when I look to the left of the chart, I can see kind of how it held like right here, kind of held right there. So I bring this across as a green box right here. Okay, if it ever comes back down here, maybe it's going to hold as support and then trade inside here. But if it loses this, we could drop from here, come down to our yellow daily. Maybe we come down to like London's low down here, and we watch what happens. And then here's our extreme. This is the low of the day, the purple line. So at the low of the day, what do? I draw a green box down there. Just in case it comes down there, it could essentially bounce. Like when I come to the left of the chart, what is this? This is the crazy gap down in the market when daily candles open up. So you can see how this level was holding as support. So I'm making my zones, guys. Okay, you know, I'm a zone to zone trader, so I take time to make my zones in the market. Okay, and then I can see now most of the volume might consolidate in here, cool off. London made its big move down and back up, so now maybe the market is just going to trade sideways and cool off a little bit. We do still have like an uptrend forming coming up, making higher highs, so we'll see what happens when it comes up here. Still lots of room for, if you follow RSI, for it to go into overbought. We're nowhere near being really overbought, but what we can look for is maybe a push. If it pushes down, gets rejected, we could look to maybe sell below here and take it down to first the yellow line. There's going to be a reaction there, okay, and then down to the double bottom. So I measure the move, so there's no surprises. If you're an aggressive scalper and you take that sell down to the yellow line, it's roughly 15 to 20 pips, and it could come down there, catch a wick, and bounce right back up for the retest. If it breaks the yellow line, we could come down to the double bottom. That's roughly 30-40 pips down there. And then if it really breaks, you could get a 50 pip drop coming down through here. And if it breaks this big support area and drop, I have a black chart, and it could come all the way back down to the bigger demand area. But if you're a precision scalper, you can see that there's a pivot point right here in the market at these wicks. That's where like the auction took place. This was the double bottom at the end of the day where we were buying. So it may come retrace back down into here. Okay, so right now we're trading sideways. So I'm going to put it side by side with US30 right over here, guys. And I will give you guys these charts in one moment. And I just need to drink some milk, guys, because I tend to lose my voice talking a lot. Today I got to conserve it because I'm doing this London, I'm doing Wall Street, I'm doing FOMC, and then we have a webinar with my man Carlos. He's going to talk about his journey as a trader before SST and after SST. So Carlos is as real as it gets. It's going to be a very good webinar for the snipers if you want to join it, guys. It'll also be recorded if you miss it. And as soon as we get the website working and we get it, it should be today, we'll have it uploaded. Okay. So guys, let's continue. If you guys are okay, so just a recap, London's move was a break to the low. Okay, we found it, bottom, it came right back up. We're not breaking to the high, so we're back in consolidation. Okay, same with DAX. Okay, they broke the low, came back right back in consolidation. So I'm going to move over to gold and oil. Was this analysis good, guys? Did you guys understand? Was I talking too fast? I tend to talk fast because I want to get so much information in a short amount of time. Was this okay, guys? On Zoom, was it too fast for you guys? YouTube, was it okay? And if it's going over your head, then just take your time, guys. Okay, remember, you're not going to learn all of this in one session. You're not going to learn it all in 2 hours. Some of us, this took years and years and years to kind of perfect. You know, it's a craft. Scalping is a craft. It's a skill. That's why not a lot of traders can scalp the markets. You have to have the right mentality. You have to have the right mindset. You have to have the right risk management, and you have to be confident in what you're doing, because scalpers take multiple trades. So you got to be confident with what you're doing. But if you're patient, you're disciplined, you look for the best setups, you can be very successful at doing this. But if you don't take it serious and you're just trading everything and you don't care about risk management, I'll be the first one to say to you guys, good luck as a trader. Good luck in a career in trading. You know, you might hit a couple days, you might be like a one-hit wonder, but to consistently do this daily, you really got to take this serious, guys. And if you've been struggling for months and years, I tell you to take trading serious now. Start fresh. Start like it. Believe me, if somebody told me this when I was younger, probably would have saved me losing $25,000 in the markets. I wish someone was there to tell me this stuff. So SST, we're here for you guys. Let's look now at gold and oil breaking down. Like, look at oil just selling. We lost all support levels. I'll start off with gold. Okay, be careful trading gold. Okay, gold is a very erratic, manipulated security. If you're a beginner, 100% go on a demo account. Okay, 100%. Don't go live with gold when you have no idea what you're doing, because you might as well just give me your money. I'll take your money, and I'll hold it for you, and then I'll give it back to you. I'm not like a broker. A broker will take your money and they won't give it back. If you want to do this, like I'll hold your money for you. I'll put it somewhere and get you some interest on it, and then I'll give it back to you. I won't take it from you, but I'll give it back to you. If you're gonna trade gold with no experience, okay, I feel bad for you, because 99% of people will lose their money on gold. Okay, so if you feel more comfortable, give me the money, trade gold, I'll hold it for you, and I'll give it back to you after a month so you don't lose it. Gold is a tough security, even for an experienced trader. There's traders that have more experience than me, longer than 20, 30, 40 years, and we talk, and they tell me, Ron, gold is one of the hardest securities they've ever traded for the past 20, 30, 40 years, and I agree with them. It's a tough security, okay, because it's got a mind of its own. So you really got to know the personality of gold if you want to trade this thing. Okay, so here we go, guys. So how has gold been trading? Do we all know that 2050 is a critical supply area? We should all know this, 100%. If you're a gold trader, you got to know this, okay? What is our all-time high? Everyone should know this. 2079.80, like right up here, okay? So that's like our all-time high. I can even draw it in the market before we even get there, okay? If you don't believe me, you look to the left of the chart, and then you'll catch all of these wicks. Okay, we were trading this live. We were scalping this wick. Believe me, we shorted this wick on March 8th. There's videos, there's live videos. We have them on YouTube. And over here, remember this day. This was one of the best days. I had so much fun trading this day. This is when we first started with SST. It was kind of like our first ever. If we do like a throwback blooper video, I will pull this out of the vault, and it's hilarious. It was just like 10 or 15 of us in the Zoom room, and we shorted this all-time high. It was hilarious. It just broke down during the Asian. We were doing the Asian session when it broke down. Okay, so gold, guys. Already, I'm picking out my supply areas. 2050 is a supply. Resting supply is sitting at the all-time high up there at 2080. Now, we came up yesterday. It was a big bullish day. US dollar kind of sold off yesterday, so we saw a rally in gold. Look at where we finished. Look at where we closed, guys. We closed above like almost all of these wicks over here. So this was a big close. So we're probably going to get a pullback leading into New York and FOMC. But we'll see where we find some support, and maybe where gold is going to, who knows what we get with FOMC. And it might come back and test 2050. We also have NFP on Friday. So guys, be ready for rocket fuel for gold this week. We could be breaking some serious levels above us, or it could get rejected and we're coming back down into here. Okay, so it's going to be interesting. It's going to be a big week, and then we'll see how it moves next week. Okay, so what I've done is now I kind of located the high, purple. I located the low. Okay, this should be simple for everybody. Just high and low. That's our daily. This is our range. 2020, 2012, or 13. Okay, $7 move, 70 pips. Great for a scalper. Okay, and then what is another critical level? Right here. Body to body. Close, open. 2016, 2017. Place a yellow line right here. And you know what, guys in Zoom, I told you guys this like a long time ago. Maybe it will help you guys in YouTube too. Have your charts ready with a top down, and then what guys were telling me, Ron, we compare like my chart with yours after you do it, and it gives them more confidence if kind of we have the same areas. You know, that's what you can do, guys. Come prepared. You know, don't just come here. Come prepared with your charts done that you trade, and do a top, and then I'll do a top down, and if they match kind of your areas, it gives you confidence that you're doing really well. You know, like you're doing it exactly how I look at the market. So I'm not saying I'm perfect at this, but I can locate some critical areas pretty good, and I'm sure that you guys can probably do it better than me. But that will help you guys, you know, so you're not lazy. Like a lot of traders are just lazy and kind of want us to do everything for them, but I don't believe in that. Laziness doesn't get you anywhere in life. Anything, not trading. Just if you're lazy in general and you wait for other people to do stuff for you, you're not going to go too far in life. Okay, if you want shit to get done in life, you got to go out there and get it. Okay, nobody's gonna give you anything. You got to go out there and get it. It's a dog eat dog world. Okay, it's not easy out there. I don't know where you guys are from, but I'm sure it's not easy where you guys are from. Everyone here has gone through a struggle. We're traders. I'm sure all of us have struggled. Okay, lost a lot of money. Lost a lot of headaches in the markets, lost a lot of sleep in the markets. We lost friends, we lost family in the markets. You know, these markets are ruthless, guys. So take your initiative, take your trading serious. If you put one foot forward, I'll help you with the other foot, but you got to put that one foot forward. So have your analysis done, get ready. Yeah, some traders, Van Hartwick, I'm real, have lost traders in the markets due to suicide. You know, a lot of traders don't talk about that because financial ruin ruins them as a person, ruins their family. And I have friends back in the day who were young traders, and they lost money and suicide, you know. So it's real, guys, it happens. So mental health, everything, that's why trading is very mental. You know, I lost a good friend of mine when I was younger trading with him. No one was there for him. He didn't really tell us what was going on, and we found out the hard way. So it was sad. He was very young. He didn't know how to deal with losing that type of money, and he didn't know how to tell his family and things like that. So trading is, guys, it's real. You know, don't take this thing as it's a joke.
Be very, very serious. So I know I don't want to ruin the flow of the stream, but it's good, guys, that sometimes we got to be real with each other. We have to talk the honest truth, you know, like, and if anyone is struggling as a trader, we are here for you guys. You know, I've gone through times like that myself where it was dark, losing a lot of money. But we have to have a solid community to help traders. You know, that's why we have a positive community at SST. You know, it's not always just about making pips. It's about helping people, just talking there, being there to talk to somebody, you know. When you're having a shitty day, someone is there always to talk to you, to lift you up, to lift your spirits and things like that. So that goes a long way, not just with making pips. You know, you got to have a good community surrounding you. Okay, guys, so sorry about that. I don't normally talk about things like that, but it was sad losing a good buddy of mine. Okay, so let's go back to the chart. So we got high and low, critical area in the middle. We have our upside momentum for gold today. So if we continue bullish, we're probably going to look at 2025. We might look at 2030 and 2040 at the supply area. And we all know 2050 is that psychological area right here. And continuing bearish, let's say we can come down and we cool off our daily candle. If we cool off, we could be coming down to this critical level, 2008, okay? It's about 50-60 pips where we are right now, but that's a nice critical level. I've got a body, a wick, like this wick getting rejected, and then continue to push down. So I'm going to kind of locate right now, like kind of where there could be some demand in the market. Like right here, this was supply in the past. Okay, see what I mean? Where it got rejected here, rejected here, rejected here, rejected here. Then we got these critical bodies that were trading red, green, red, green, red. We didn't get any volume closing above here. Then if I bring this across, see where it got rejected, bring it across. I see right here, Monday got rejected. So if I bring this across, and now what I'm going to do is flip the color. I'm going to make it green now. So maybe if we even pull back into this green box, 2007, 2004, this might be a good area where maybe the market will pull back and continue to come up. It might be a small daily candle pullback into here, hold demand. You see now how it's could act as structure in the market, and maybe it comes down here, we hold psychological 2000, maybe we come back up and maybe we're breaking for some new highs. But if we lose this area, like if we lose 2004, unfortunately gold is going to possibly drop down, break 2000, critical level 2000, and maybe come down to these bodies, 1997. If we lose 1997, we're coming down to 1990 right over here. And if we continue pushing down, we may come down to critical, body, 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 body. Then I have all of these wicks down here. So let's kind of find where the bottom of the wicks are. Give it like a little room, like right there, another demand area. So we found another demand area around 1975 and 1970, okay? Because we don't know, maybe it will come down there, all the way down, and bounce all the way back up. And if it doesn't hold here, you just, again, look other critical levels, 1964, right there. Very easy, like body, body, and a wick. Okay, so that's analysis for gold, and let's go to the 1 hour. Okay, so yesterday, big bullish day on gold. Okay, if you were kind of short selling, you probably got ruined yesterday because it kept pumping and pumping and pumping. Little pullbacks continue to go, pullbacks continue to go, pullback. You know, it's gold tends to do that. Okay, so when did this big move happen? 10 a.m. yesterday, and we continued 11 a.m. where we made some highs, pullback, and now we kind of have like an hourly trend line still holding this area. This is now that demand area that we located, higher low and a higher low. But right now we're kind of pushing down with some good momentum. Like we're not breaking here. We got rejected there and we got rejected 2 times there. So we have some really, really nice hourly supply in the market right above here. So we're not closing above 2020. It's holding down. So we're touching our low of the day. We may sell off back down into this box. So we'll see what happens if we can break and come down into here. So let's go to the 5 minutes and let's see how the 5 minutes are moving. Okay, so we came all the way into there at midnight and big rejection coming all the way down. We found some support here at 2015. Here's like another support level. You could have had a line here and you see it bounce, come back up. Where do we come back up to? Into that red box. 3 rejections, and then the market continues to push down. We broke this level, we made that low, that's our low of the day, and now we're coming right back up. So now with these 5-minute candles, got to kind of make some sense with these things. Okay, so we see a double top up here. Okay, so if gold gets above here, like this highs, you know, we could look for a big move coming back up, but we're not there yet. So we got to find other critical daily levels. See here where the volume was below. So if we do come back up above maybe the yellow line, maybe we could look for a buy and take it into the red box. But then we have to maybe liquidate in there. We got to see what's going on because it could come right in there and get rejected. So if I see it's coming up, there's about 20 pips. The top is about 30. It could come in there and get a wick and go right back down. Or if we break out to the high of the day, we flip this red box green, maybe we'll populate with bids, we retest it, and maybe we're going to shoot up to 2025. Okay, but we are trending down. Okay, you can visually see the downtrend creating lower lows and lower highs in the market. So if you want to draw like a trend line, continue to come down to the next demand area, we have that. I also have over here, I can see that this area visually held as support pivot, came right here, support pivot back up, and now this might act as maybe a resistance pivot where it's coming up to the trend line green, maybe it gets rejected and we continue to push down. If we start to maybe break this trend line and we start to close above this area, we could flip this box green, and if it retests, we could possibly take a buy up to here. And again, I measure the move. Okay, if we get a close, a retest here, coming up there is roughly 15 to 20 pips minus, I have just 1 pip spread trading gold. Sometimes it fluctuates to 1.5, 2, it fluctuates. But if you understand what the spreads are and what you're getting out of this, that's what scalpers look for. Remember, I'm a scalper. I'm not looking to take a buy here and hold it until FOMC or till NFP on Friday. I'm looking to just secure the bag up to here. And if it goes a little more, I continue to hold it a little bit more, but bring a trailing stop loss. If it closes above here and retests, then it could come up here. And then maybe I secure 30, 40 pips. But I'm always looking to secure the bag. You know, I like realized gains. You know, like a lot of traders, they like to hold and hold and hold and hold and hope for the best. Those are unrealized gains. Until you close that position, you actually have that money in your pocket. Like traders can hold all day, but you know, it could retrace on them and then they hit a break even or stop loss because they're holding for those grand slams. I trade like a baseball game. Singles and doubles, load the bases and keep hitting singles and doubles all day, and you keep cashing in. Baseball teams win. You know, you win World Series like that. You don't always have to look for grand slams. If you're a single doubles and you load the bases, eventually you're going to hit that grand slam. You'll get that big trade. But if we're just aiming for big trades all day, it's not going to always happen. You can scalp these markets for these smaller quality setups all day. It just takes patience. A lot of traders don't want the patience. Just taking a buy and holding it, that's easy. Place a big stop loss and hold it and just hope for the best. That's not what scalpers do. We're not hoping for the best. We have calculated risk. We have targets where we go to, and sometimes they go to targets. Other times they don't, and you got to learn how to cut it. I tell traders, learn how to cut losses. Okay, it's nothing negative. It's a maturity of being a trader. If a trade doesn't go your way, for example, if I take a buy here, I'm looking up here, and it starts breaking down here, the purple line. This is a daily low. I have to cut this trade because if it really breaks down here and the offers come down, this could be a big dump coming down, and I might be, before I know it, I'm down 30, 40, 50, 60, 70 pips, and then I'm still holding it, and you know, it could create a disaster. V, you're aiming for bunts? Yeah, bunts are like maybe 3 to 5 pips. That's a bunt, sacrifice bunts, but they do help teams, but it's I think we got to try and get on base, V. We got to get on base with like a single or a double. Bunts are, unless you're really, you know what you're doing with the bunt trading. But we've found like a consolidated range as well for gold inside here. This was a breakout to here and then came up to supply and pushed right back down. We broke down the consolidated zone. We came down here and now we're coming right back up. So again, maybe if we come back, this was like another setup. If you're an aggressive scalper and you want to sell below here to the purple line, measure the move. roughly, what is it, 10 pips? No, it's more, 15 pip. Okay, if you don't like that, if that's too aggressive for you, you could be waiting below the daily low down here. Yeah, gold could be a quick little buy, maybe place your stop loss below the low, and maybe you can take it up. Okay, and then here, this could be another area where there could be demand in the market. So if you like to sell below there, you absolutely can. If you want to sell this zone into here, you can do that as well. Okay, it's all personal preference. It's what you're trying to look out and get out of the market. With gold, let's keep it below here just in case. It's kind of what gold can do is it could be like an impulse, come down here a little bit and then pick up the bids like down here, maybe for like 7 pips. It might be too fast for some traders, and then it comes back up and closes here and does something like that. Okay, so we'll leave this as like we'll let it pull back. This is like a pullback range. We'll let it pull back in here. We'll see if it holds, and then maybe we can continue with strength, and then we can add a bigger position up here for a buy. Okay, so that's gold. I see you guys are talking about oil sudden drop. Yeah, oil's been dumping, guys. Okay, so remember that gap fill. Okay, hopefully some of you guys remember the gap fill, the big daily gap fill that I've been talking about all for the past couple weeks now. That's it. Once that gap was filled, look at what they're doing. Look at it. Okay, so remember what we were talking about? Here was the close on Friday, March 31st, closed over the weekend. This is what happens with commodities. There could be news over the weekend. There was news over the weekend with OPEC cut production, and that's why we opened up Sunday night at almost $82 a barrel. It was a big jump, $6-7 a barrel, and then we held here, we held this area $79 for quite a bit, for an entire week. They pushed it to the high, $83, you should know, is a monthly supply zone. Okay, if you're an oil trader, you need to know these things. Okay, that's why you got to get to know these securities better than you know your family members. Okay, I'm telling you guys the honest God truth. Limit your securities to 1, 2, or 3 and master them. Okay, don't be looking at 25 securities a day. It's too much. Okay, you can make your daily goal on 1, 2, or 3 securities, but get to know them. So anytime everyone talks to me about oil, when I'm talking with my friends, if I'm having a coffee with them and talking, I don't even need to look at a chart. I tell them, guys, do you guys know that oil hasn't broke $84 in months and years? And they're like, I'm not even looking at a chart, and they're like, how do you know that? I'm like, because I stare at these charts all day, every day. So, you'll know these things. You're going to get very familiar with gold. You'll get very familiar with US30. You get familiar with NASDAQ if you guys are trading these things on a daily basis. So it's just levels. They repeat over and over. They're zones. So here was the gap fill. Okay, some traders say, Ron, when will it fill the gap, the imbalance? It can fill it the next day. Like Sunday could have opened here. Monday could have came all the way down and filled it. It could be the next day, it could be the next week, it could be the next month, it could be the next year, it could be they didn't need to fill this gap for 5 years if they wanted to. They could have continued pushing crude oil over $100, and maybe we'd be talking in 2-3 years coming back down to fill this gap. So they don't always happen. But this one did. This big candle right here on Wednesday, April 29, closed below all support structure. So that caused now sellers are in control. Here's the pullback and then continue push down. Now we filled that entire gap, but we kind of closed below here. And then we had the pullback last week, and then continuing yesterday, big bearish day. Look at, we broke all support level right here, the $74 range, and we continue push. Where did we come down to? 50% of this big body on March 27, and now we're continuing to break below it. We might be coming down to $70 a barrel, like right there, $69. There's the support level. So let's see down there. It could be maybe good. We could be getting ready for good bounce buys on oil. If you're a swing trader, I know there's a lot of swing traders that swing oil. Not a lot of traders scalp it, but a lot swing it. So you got to do higher time frame analysis. You got to look on the weekly and the monthly and find out those critical zones. You see, like here, how I'm finding like daily. I start daily 1 hour, 5 minutes. If you're a swing trader, you don't need to worry about 5 minutes. You need to go monthly, start your top down on monthly, weekly, and trade either the daily or the 4-hour candles. You do not need to look at 1 hour, 15-minute, or 5-minute. Don't waste your time with that. Stick with if you're swing trading, stick with the higher time frames. You're going to have a bigger stop loss because you're looking to hold for multiple days, but you're not looking to make 30, 50 pips on a swing trade, holding for multiple days. You're looking to make 200, 300, 500 pips. Okay, so our high, $71.75. Our low, $70.40. That's our high and low. Let's just do a little bit of upside momentum. Right now we're down here, so we're probably going to break bearish. But just in case it flips, okay, it flips and it comes back up, where could we move to? Okay, so do we have anything in between the purple lines? We do, okay? If you look to the left of the chart, is that not a wick right there? And do I have a lot of wicks right here? I do. $71.25. Remember we were talking about this area? Always quarter increment moves. $71.75, $71.25. Commodities move on quarter increments. Don't ask me why, but they just do. If you're a price action trader, you will know this. And now, if we come back up, we might hit 71 and a quarter. We'll see what happens there. If we continue bullish momentum, we might come back to our high of the day and push out. If we push out of this purple area, where could we go? Let's look where we could go. Maybe to this body, this wick, $72.35. If it continues to push, where could we go? Okay, look to the left of the chart. There's the bodies, okay? And we can cut it right through there, $73.16. That's good enough, okay? I can continue to go, but that's more than enough. We're down here right now, okay? I don't need to worry about $73 because we just broke 71, so we're far away from there. I see traders are putting lines here, 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 and I'm telling them it's overkill. It's too much. Okay, you're wasting your time. We're not there yet. We got to break through a lot of resistance points to go up here. Right now we got to look bearish. Okay, so this is what we got to focus on today. With FOMC in New York, if we break our low now, in like London's low, and we start to come down, where could we go down to? So $70. $70 is a critical psychological area, and it's like right here. So we have to really identify $70 at those bodies, okay? If we lose $70, then it's a real like psychological area. We get down to 69 a barrel, down in here, 69.777. Okay, remember the slot machines we're talking about? Sometimes you're going to see numbers repeat themselves. So 69.777 is the next area, and then over here, this is kind of the extreme low. Okay, that's where we have a body bounce, body, a wick, body, and wicks. So if I'm locating maybe like a daily demand area where we could see like an influx of pending bids, want to get in, like maybe long oil, maybe $68, $69 could be an area where we can long gold, or sorry, oil, coming down into here. So it could come all the way down in here and bounce. Look at in the past when it came down here, it bounced. Here was a massive impulse break on Friday, March 24 of 2023. It came all the way down to $66 down into this demand pool, and it got rejected hard, and we closed right here, and then that's what started this big bullish candle on Monday the following week. So you see how they do things on like Friday. What they do is they come down, they grab all the liquidity, then we move into Sunday and Monday, the start of the week, and that's where they drive the market. Okay, so that's our analysis on oil on the daily. Let's go into the 60 minutes. Okay, so we had the big push down yesterday, 9 a.m., 10 a.m. See, if you're buying, they're just small buys, they're pullbacks. You got to be careful because it's still selling pressure, and then we started to trade sideways in the Asian session. And then when did we start to break down again? London, and we came all the way down 4 a.m. Okay, so now coming up, where could we go? Okay, so let's locate our hourly pivots, body to body. Right here, let's place a white line right in here. It's roughly $71 exactly. Okay, 71 bucks, right on the dot. Let's place a white line here. So what happened? London, we broke this hourly support right here. Broke all of this kind of support structure, and that's where we got the big drop in the market. Okay, that was the last thing holding oil right here. And it broke. Right here, broke. If you're like a 5-minute trader, when you see hourly candles approaching these critical areas, you can go to the 5 minutes and start to look for entries. You look for a 5-minute candle that closes below that white line, retest it, drops, you go into a sell, and then you're following this big body hourly candle push down. Look at the next candle, how it opened. Opened with a very small pullback and continued to break the previous low, and we drop all the way down where we got to the low of the day, and now we're bouncing right back up. So do we have anything to the left of the chart inside here that we can look at on the hourly candles? Let's see, maybe if we find maybe some bounces. If it bounces, I can see over here just a couple wicks right here, a wick right here. Maybe $70.53 could look as another level of support before it hits the daily bottom, but it's so close there. You can see that it's insignificant, so we'll keep it at the daily bottom. Now we'll see is what's RSI. RSI, look at it. Okay, we've been sitting down in here 17. We're right back down to 17. So if you're an RSI trader, look at how oversold the hourly RSI is. It's sitting down at 15, 16, 17. This is like a great buying opportunity. But what I'd like to see is hourly volume close above that white line, $71, and retest it and then push up. Then I know that this is possibly a good buying area because we're closing above that resistance and maybe we're picking up liquidity, but it might need to come back down and pick up more. So that's why I like to trade on the 5 minutes. I see what's going on the 5 minutes. Here's the 5 minutes. Can we draw a trend line pushing down? Absolutely. Okay, if you see there's a trend line pushing down, we can kind of clean it up just a little bit better, like if you want to keep it like that. Okay, so we can see that the trend line is basically bearish, making a lower low, lower high, lower low, pullback, lower high, lower low. Okay, so 5 minutes, remember the white line, that's what I was telling you guys about. That's the hourly kind of resistance. We're getting, look at, extremely oversold on 5 minutes, so it's oversold. But if you're buying, like you're getting caught, you're buying and then it's going back down, you're buying and it's going back down. So we really have to be patient and wait for the volume to come to us, as opposed to just buying everything just because we see RSI is low. That's not a good way to trade, guys. That's how like beginner traders trade. They just look at RSI, anything below 30 they hit the buy button, anything above 70 they hit the sell button. You're not going to go too far in trading that way. Believe me, I'm sure millions and billions of retail traders have backtested that and tried. If that worked, that would be the easiest way to trade, and it doesn't work. Okay, it might work 1 or 2 times, but consistently it won't. Okay, so what I want to see is I want to see them pick up momentum, pick up volume down here, pick up bids, and come and at least break the trend line and close above here. Maybe we'll get oil a nice little spike up here. You can use this level for any time. You can place an alert up there. Maybe it might be 5 a.m., 6 a.m., maybe 8:30, but who knows? But at some point, maybe oil is going to come back and really trade into this area. Okay, so now what's going on? We're getting rejected at our low of the day. Okay, you can see the big wick. It came down there and it got rejected. So kind of what I'm going to do is place a green box to let us know that if it needs to come back down here, it could come down to pick up some bids. If it's trading in between the red and the green, that's what we call the accumulation distribution area, or aka consolidation area. Okay, so this is where the market is just trading sideways in here, picking up some bids, coming back up, then it gets rejected. So you can see all the rejection, so it's still coming back down. It needs to maybe come back down for a double bottom, triple bottom, accumulate, and then maybe it will break out of here. If it just pulls back, it cools off the RSI to like 30, it might get rejected here and continue to push down. And then later on, we could continue to maybe sell with oil. But I like to see like first a nice healthy pullback. I like to see it come up, down, and then back up. Then if it kind of gets rejected, at least now it's got more offers, more supply, then it can break here, and then we can kind of sell the market and come down. But sometimes when we're coming down and it hasn't really done a nice natural pullback, it might come down and continue to push down, and then what happens is we haven't really pulled back, and then it breaks here and we all sell, and then right away it's a rejection candle, picks up those bids, and then does something like this. And I've been part of this a million times, probably you guys have too. So it's kind of just like a fake break. So we naturally need to see it come down, go back up, see how it reacts here. Then if it goes down, it might be coming down with more volume, then it can actually break and be a nice trade down here. Okay, so I'll place the green box for like a heads up, but you got to follow like how it's moving to get to these areas too. That's what I find a lot of traders are failing to do, is they're just looking at these price points for to buy or to sell, but they're not really watching how it's getting there. You gotta watch how it's going there. It tells you a lot. Candlesticks tell you a lot. They tell you a story. So if you understand what they're telling you, you'll be that much better of a trader, and I guarantee you're gonna get faked out less in the market. Okay, so gold, guys, gold was a nice little buy here. You could have bought this area. We closed above, retested it. Could have had your stop loss like below here, and it's coming up maybe to fill that range, and that's what I was telling about. When we were here, I said gold was looking like a good buy. You could be up 15 pips. If it comes up all the way up there, approximately maybe 20 pips, could fill that range. And when it comes up here, that's a daily yellow line, it could get rejected up there, or it could have a nice little impulse breakout, and we could look for continuation. So gold is moving pretty nice. Oil is still bearish, coming down. Okay, so be careful with that. Guys in Zoom, give me one moment. I'll give you guys these charts. What time is it? Okay, it's almost wow. Okay, I really need to do these faster, guys. I'm sorry I'm taking so much time, but top down is important, guys. I can't stress that enough. Okay, so let's take a look at GBP USD, and we'll look at DXY. Okay, I like to keep these two correlated beside each other. They're kind of inverse correlated with the dollar and the pound. I just want to look at US30 and DAX before I do anything with GBP USD. So DAX is still consolidating in this range. Okay, so remember what we were talking about yesterday? At some point it will break out of here or break down. Okay, but still it's inside the box, so it's accumulating. You got green, red, green, red, green, red. US30 actually broke and came back up, and a lot of rejections. So that's what I was saying, guys. This could be an aggressive scalp coming down. If that's not your area, you wait below here. Okay, so same with DAX. This is an aggressive scalp down here. If that's not your area, what you do is you wait for it to maybe come through here. Okay, so I hope I made that clear to everybody. This is more of an aggressive scalping here, and you got to know exactly how many pips it is. Same with this. That's an aggressive scalp coming down. There's the close, the retest. For example, if I sold this, my stop loss could be above these wicks, and if it pushes down, okay, it came down for approximately 10-12 pips. But sometimes you got to pip and you got to get out of here, because this is that aggressive scalp zone. It's in and out. You can't get fancy down here, because it could just rotate right back up. And that's that double bottom that I warned you about. It could come down in here, go back up. We broke the neckline. Okay, it dropped for 10 pips. That's that aggressive scalp. And then now it could come back up and do what gold was doing, and then go through here. Unless you're going to continue to like hold your sell, and you have like a stop loss above these wicks or at this zone, if it pulls back and it's a lower high and then push down and then break here, yes, you'll get your bigger move. But you got to understand that it could come down here and pull back here. Okay, so let's do GBP USD final chart, guys. Okay, so GU. This is one of the most liquid currency pairs in the world. This with Euro USD are the most heavily traded currencies pairs. GU, EU. So this is called the cable. And how has it been moving? Okay, we're kind of in this big daily flag pattern where we're finding some support down here at 123. 70 area, finding support here, finding support here, finding support. There's a little bit of resistance right here and right here. We actually broke above it on Friday, April 28. Then the open of the new week Monday, we came back down. Tuesday was a bearish day. Today we're closed and we're opening bullish and coming right back up. So we're going to see how we react at 50% of this bearish candle. That's where we're approaching right there. And if we continue break, maybe we're going to come up to 125.60, and then we'll see if we get some higher highs breaking out of here. So we have a daily uptrend. Like you can visually clearly see that there's a daily uptrend in the market. Okay, you could do now, like if you want to do daily trend lines, you know how I do things like with yellow? I can do a daily trend line yellow. So if my 5-minute candles are coming down to this yellow line, I know that that's a daily trend line. Okay, so I want to locate again my high and low. My low is right there, low wick, 124.60. That's our low of the day, purple line. High of the day, we're right there right now. Okay, we're right going to break out of our high of the day, 125.23 area. So if we punch out of here, where can we go? Okay, let's look at maybe this wick right over here. Maybe if you want to bring it up a little higher to that body, you can do that. Okay, it's all again personal preference where you think it will go. Okay, so let's locate the top of that body up there, yellow line. And what do I have above here? I've got kind of like resistance. Okay, so that's the top, 125.83. I don't see any price action above here, above that yellow line. So let's look to the left of the chart. When was the last time some volume broke and closed above this yellow line? We can see over here, May of 2022, and back over here, April of 2022. So again, we can get some critical areas. Okay, I've got wicks and bodies right here, 125.994. Okay, I'm off by half a pip, and that's going to be one. Let's just make it that cycle. Sorry guys, I'm really anal with numbers, so I got to keep it at 126 flat. Psychological areas. Okay, and it now lines up nicely, and we can continue to move up to these two wicks, 126.15. Do you guys see what I'm doing? Wick, that wick, and then I can see where kind of maybe there might be some supply. Okay, so over here, maybe I draw a big red box and I bring it across, and then if it's coming up here, that could be a big supply zone coming in right over here. I can take this supply zone until next year, 2023, 2024. Let's take it to 2025 and 30. It's a static zone. Okay, the only thing that changes is the volume. Okay, the volume is the thing that's variable. The only thing that moves are the candles up and down. When they touch these areas, there'll be a reaction there. They might get rejected. So if it gets rejected, it's supply. If it closes above and retests it and holds, it's demand. We've identified like a block, a zone, whatever you want to call it. Okay. So now we're coming up. That's upside momentum. Okay. So what happens if we pull back? What happens if we get rejected? Then we pull back to here. Look at all of these bodies, this critical area. This should be very, very visual for you. Okay. Body, 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 body. A wick rejection there too. So that's a very important area. And look at it, 124.95. Just breaking below a critical psychological 125 level. If we can't hold that, you see how it's 50% of the bullish candle? Exactly 50% of today's candle. Like, I'm not making this stuff up. Then it might push down to the low of the day. If we break the low of the day, there's two wicks, tweezer bottoms waiting for us right there. Okay, and then if it breaks, remember this big yellow trend line? What is that? That's that daily trend line. So if we get rejected and we're coming down on the daily, we'll have a big push down to the downside down here. If we lose that daily trend line, push down here, 124.4, and then come down here. Now I'm starting to find where my daily demand is. Like, you see here, I have no more bodies. That's the last of the bodies. Then all I have is a rejection wick, go up, rejection wick, go up. So when there's wicks, that's the range. That's where the liquidity is being grabbed. So that is a demand zone. Currently pending in the market, waiting to get activated. Like what's going on over here on Bookmap. Okay? So we've located something. Now, what do we have? We have those bearish candles came down. We have a big bullish candle coming up today. Let's see when all of this started on GBP USD. Okay, so we've been selling off, selling off, selling off. Where did it bottom out? Yesterday at 9 a.m. Wall Street, 10 a.m. came back up. That's what started the move. It bottomed out there. And we pulled back and continuing higher highs, pull back, higher low, continuing to drive. It's approaching RSI 70, but this thing can continue to move. Okay, so what we have to do is locate some hourly resistance points above the purple. Right here. Okay, that's a good area to get started. Let's place a white line there. Why there? Okay, guys, remember this big body? There's the open, there's the close. That's roughly half of it right there. and then it lines up with body to body, lines up with a wick right there, almost half of that red candle. So that's a good area, 125.35. That could be, we could come all the way up there, tag that white line, and then we push down, or it could potentially break and then scale to the next daily area. Okay, so we do have an hourly trend, we have a daily trend. Okay, so even an hourly trend, it's pushing up like this. I can do a white line here now to represent hourly. I color code my trend lines as well with my higher time frames. So let's go to the 5 minutes and let's see what's going on now. Okay, so the 5 minutes are a double top. We can clearly see that. Look at the bearish divergence. Look at that, okay? Do we all see the bearish divergence? Double top, it looks like an M is starting and we're pushing down. This could be a good selling opportunity for us. But sometimes what they do is they'll come right up to hit those pending orders up there. So let's just do what we do, okay? A red box right here, guys, at that daily high. Okay, we're right in that second leg of the M pattern coming down. If it breaks up above here, where could it come up to grab liquidity? So you see what I'm doing here, guys? See above the purple line, I can see all of these wicks right here. I place a red line just in case they're going to come up there and be sneaky and try and grab some that money up there. Those are pending orders up there. If I'm a market maker, okay, which I'm not, but if it came up here, like if I can see that there's a lot of pending orders up here and I'm going to short the market, I'll come up here with an impulse candle, activate all those pending orders, take millions and millions and millions and billions of dollars, put it in my pocket, and then I push the market down, right? That's what could happen there, okay? So don't be surprised if maybe they go one more time up there to grab the bag. But what we're looking for is to break this type of structure right over here. Now I see some structure on the 5 minutes. See here how it held? So this is where we could possibly break support and initiate maybe a nice sell on bearish divergence. Where we can go below here and then push it down to where? To this point of control right here. Okay, hopefully things are making sense now. See this green candle? 50% of it is right there. See where we came down right there. So it could come all the way back down here and hold because the market pivoted right here. Why would it not pivot again coming down there? So if I'm scalping that move coming down, taking this trade, it could come right down here. That's about 5 pips to this area right here where there's a red line. Like I can place a red line right here because this is where there was a lot of bodies here. That's a 5 pip move. This is, remember, this is currency now. This is not US30. If it breaks down to there, it's about 10 pips. 10. Not 50, not 30, but 10. 5 to the red line and another 5 to down here. Okay, that's unfortunately how it's ranging right now. Okay, so you got to know what security you're trading. That big move, if it's a big red candle coming down here, that's for 10 pips below here. But you see now how we're getting rejected? Some sellers are selling up here and then they got their stop loss here. But when they have their stop loss here, if I was a market maker, I can see their stops. I'll come in and take their stops and then I'll move the market down. Okay, so just understand how market makers move the liquidity. Don't think of a retail trader. Okay, you're not a retail trader. You guys are smart. You guys can be like your own bankers in these markets. And if we hold here, or it's a minor break and no close below, and we continue push up, then who knows? Maybe it's going to form a higher low and just cool off the RSI, and it's not going to be like bearish divergence. It's just a false signal, and then all of a sudden we're breaking out to the highs again. We take out that red line, and all of a sudden we're coming up to the hourly, and GBP USD is still bullish. Okay. So we'll watch what's going on, guys. That's the charts, guys. Let me just put this one side by side with DXY, which is the US dollar. So what we see with US dollar is kind of opposite. Okay, so US dollar, when it's bullish, when it's getting strong, we should see a decline in the pound. If the US dollar is dropping, like over here, see these 3 bars? What time did they start at? 3:55, 4 o'clock, 4:05. Red bars. Okay, those are called 3 dark horses right here. 3 dark crows, sorry. When did it start? 3:55. Let's look here. Here's like the 3 soldiers right here. 3:55, 4 o'clock, 4:05. Green, green, green. Okay, you can see how they're kind of inversely correlated. Not 100%, not always, but from time to time they are correlated like that. Okay, so I can see where there's some resistance here. Okay, and there's a little bit of support being made right here. Okay, so it's 4:30 now. We're done all of our analysis. Now let's see how these markets are moving. Okay, so I'll give you guys these charts one more and we're off to the races. Okay, one more chart for Zoom. There it is. Okay guys, so if I haven't been answering your questions on YouTube or in the Zoom or anything like that, guys, I apologize. I just was doing the analysis. Sometimes I don't look at the chats. I'm just charting. So if I kind of didn't answer a question, it's not that I'm being rude. It's just I was focusing on the charts, guys. Okay. So let's start off again from the beginning. Let's look at what US30 is doing. This is kind of my security that I like to trade. So right now we see we're kind of consolidating in here. This area, we can flip it red. We see we're below it currently. So let's go red. And then if we come back and trade in the consolidation zone, I'm looking for a buy up there, but now I see the market is down here. So I can kind of trade in here now. So what I can do is I can wait for that volume to maybe come back into here, close above, maybe retest this. I can go in and buy and take it back up to there. Okay. Otherwise, if you don't want that, this is your choice. Okay. You always have choices as traders. Okay. You can still continue to wait up there for the bigger daily break, and if it comes in here, it's just gonna maybe stay in that consolidated area. Okay. But if you want to get a little bit more aggressive with your trading, you absolutely can. We could look for something above there. It's zone to zone trading. Okay, and also, okay, we're pushing down, we're still pushing down. So if you took a sell, like here, number one, where do you place your stop loss? So if you place your stop loss like right at these wicks, you see this last candle that came up here, its business was to come up there and take out those stops, all those tight stops right there. And it did its job. It came up there, took your stops, and now it might be pushing back down. Okay, and this is a target. When it kind of comes down here, that was that target we said, roughly 20 pips. But if you have your stop loss kind of above those wicks, maybe if you have it like in the upper supply area, you're still holding this. Maybe it's going to pull back and really break down here and drop, and you get that reward. Like if you draw a trend line, we're still trending down. Okay, it's still trending down. The bulls still have not really done anything. They just coming right back up, again rejected, coming back up. Two more rejections, and we can continue to sell below here. Okay, and what is DAX doing? Flagging still. Okay, we came all the way down here, but then it's coming all the way back up. So we will get a move eventually on DAX. It's been trading inside here since 315, and we're 445, so almost 90 minutes in here just trading sideways. Eventually it's going to get that volume that's going to get redistributed out of here, and we're either going to break to the downside or we're going to break to the upside. So this is what traders lack. Personally what I see on a day-to-day basis is they're trading this red candle, they're buying this green candle, they're selling this red candle, they're buying this one, and they're getting trapped and they're getting frustrated, they're increasing lot sizes, they're getting pissed off at the market. And when I ask them, I'm like, why are you even trading this area? Why are you putting yourself through all that stress? Why are you trading this? There's no direction right now in the market. Just wait for the move. 99% of trading is patience. I guarantee you, if you're struggling as a trader, if you become more patient, you will change your profit loss. Okay, look at oil. Okay, remember what I said with oil. Okay, look at oil. Here's a prime example. Okay, we didn't really come back up here. It's continuing to push down. This one closed below, retested, and there's the big candle pushing down. I didn't think it was going to drop that far personally, but it dropped. Like oil is just dumping. Look at the RSI. Do not fall for RSI, okay? Because this indicator is not good at all. It's good for help identifying some divergence and things like that, but it's not 100% accurate. Look at how it just pulled up green again and continue to push down. It might continue to squeeze buyers. So for us now, what we can look for to possibly buy is above this yellow line now. Okay, look at this, a shooting star candle coming down on oil, okay, right down to the next daily. So what we got to do is just go through the motion. There's our supply. if we close above here, maybe we take it back up to here. And this green box is going to be a red box. If I'm going to take that buy, I'm measuring the move before I'm even taking it. How many pips can I get? 30. Okay, maybe half of it, 15, 20. The top, 30. If it breaks out a little more, we're looking at 50. Okay, so this might be a good buy area, but we got to see a little bit of some consolidation, maybe a big V recovery now coming back in. Okay, maybe it needs to come all the way back down and tap this big daily area, and that could be a buy of a lifetime down here. Could you imagine it bleeds all the way? Look at RSI at 10 right now. It might drop down to 5, 6, 7, but remember we did our top down and I said this is that big demand liquidity pool. I guarantee you there's massive institutions waiting to get filled on buys down here, but it might come down, it might not. Okay, so do you guys understand where to buy? You want to buy when things are extremely oversold on the lower time frames, but they're approaching the bigger demand areas. That's simple supply demand trading. But sometimes they take their time to get down there. It might pull back. Like what could happen is this. Let me show you. Okay, it could go down, come back up to here. Okay, cool off that RSI. But when it comes up to here, this could be acting offers, bigger offers. Then they activate bigger offers, and then they bring it down here, and then they actually have enough volume to break it down there. And then when it comes down there, that could be the big buy that takes oil back up to here. Okay, do you guys understand what I'm saying? It could bounce right up to here. That's a nice scalp for me and you. Like we can get in here and maybe grab 20, 30 pips, but we have to respect this area. We have to respect this supply area because it could be a pullback coming into offers, and when it comes there, then they really come down with big volume. They break this daily, and then it comes into this big demand pool. Then that's where we might get the nice area to buy in there again. Okay, and gold. Gold, remember, was a buy, and what did I say up here? When it came up there, it came up there. If you do not liquidate your position or do something, then look at what the market does. It comes right back down to where you entered your trade, and it's a break even. So that's why I measure the move. If you're taking this buy here, coming up, it's roughly 15 to 20 pips, depending whatever your spreads are, but about 15. I say 10 to 15. But when it comes up there, you got to make a decision, because we don't have any volume closing above. Now it gets rejected, it comes back down, it's loading up again. So if we come and we close above here, this could be a good buying opportunity again. Look, it's a nice double bottom, higher low, beautiful, came down. There's our neckline. We came back down right into this demand area, and now we're pushing right back up. This could also be like an impulse candle that's going to break out of here and shoot right up to here. Okay, so there's also a time and place when to take impulse candles. Okay, so gold is moving, oil is moving. We'll watch oil up here. Well, I'll be watching oil up here. And okay, so now we're getting a little more movement on, yep, so get ready guys for also US30 and maybe DAX for some buys coming in the next 4 minutes. And what's GBP USD doing? Yeah, double bottom on GU. So it came right back down to this demand area. No volume closed below for a potential sell. So it's still holding. Let's see if it can come up here and close above this area. If US dollar breaks below here, okay, we're going to see US dollar drop. We could see pound pump. We could also see gold pump. We could see oil get back in here. And we could see stock market rally up to the upside. Okay, so if the US dollar drops, we could see a rally to the upside. Okay, so what charts do you guys want me to stay on? Because I'm flip-flopping here. I'm going back and forth. We got to concentrate on something. Or if you guys don't mind me moving back and forth, okay, I see a lot of you guys indices. Okay, so we'll stick with the indices. Let's watch if we get a nice little impulse breakout here. We're all indices in our Zoom, and you guys are all gold on YouTube. Martin, how come I switch from New York to London? Well, it wasn't just me that switched, but as SST as a whole, we want to keep the Wall Street sessions private for our members, and I'm the one that's flip-flopping like different times here in finding where the most traders are. We did pre-London. It was really, we didn't have good engagement in pre-London. There wasn't a lot of viewers, so I'm trying London right now. If we're not getting a lot of viewers this week, then what I'll do is maybe I'll do some like post New Yorks, maybe one or two a week. Maybe I'll show you guys on YouTube how some like midday afternoon scalping works. But I'll have to adjust my schedules and things like that. We're just definitely trying to find where the engagement is. So sometimes you got to do this on YouTube to find out where there's a lot of traders in the markets that want to learn this. Okay, so you see the rejection. Okay, so no volume closed above, not even an impulse, so no buys. Gold, okay, oil is making a move. Okay, so oil is an impulse. It was heavily oversold. It's making an impulse. Let's see, maybe if it closes, maybe we can catch a retest. If you're not in this impulse candle, gold could do something similar as well. And GBP USD is trying to break out of this supply zone too. Really nice trading candles today. Like as a price action trader and as a candlestick scalper, this is the type of what we want to scalp. These full body candles, it's nice. Like gold, sometimes gold is trading good too. Oil is trading good. The market looks good. Okay, I'm going to be honest. A little bit choppy on the indices, but the commodities and precious metals are moving nicely. Guys, thank you. Over 300 viewers. I appreciate it, guys. If you can hit that like button, subscribe to SST, help us grow this community. It's amazing. If we can all do this together, guys, our success on YouTube is your success, and we want to give back. We appreciate it. We're almost at 3 million views, and we're going to have some giveaways. I think we're like 40,000 views away from 3 million. In like about 2 years, which is a big accomplishment. So hopefully we can touch somebody, change their life, help them become a consistent, profitable trader, stop those losing days, get them with the right mindset. Our community can help you guys. Okay, so here we go, 445. This is a new 15-minute candle opening in the market. This is a volatile candle. Okay, so we're getting rejected. Let's take a look at oil if we get a pullback. Okay, so oil pulled back. Okay, so flip this green. Look at your spreads on oil, guys. Okay, gold also is like an ignited bar, ready to possibly break out of here too. Okay, so it's just got to break above these wicks. Okay, so oil retested. Okay, so you see we closed above. We're coming down. We're no. Okay, so we got a little bit of a wick. It was coming up, but then it came right back down. So no buy on oil yet. No buy on gold. Personally, I don't see anything. I think it's going to come back down. Okay, so it's coming down. So got to be patient. Okay. What broke out? GBP USD right out of the gate. Okay, so this level now you can make it like a demand area. Maybe you can catch yourself a pullback. Okay, gold, DXY US dollar broke down. So what we got to do is maybe flip this zone. Maybe it's retesting. See how everything kind of retests. So if you miss a candle, 80% of the time it's going to come back and retest it where it broke out of. Okay, so sometimes if you miss an impulse candle, that's why I say who cares, because I've been trading for for a while, and I know that it's got a high probability that it wants to come back and retest the area. So I know that's a huge candle, but you have to be part of this move to get rewarded in that, unless you're taking that breakout candle. But look at how it's coming down now. You can potentially get your retest to buy in. Instead of buying the high up there, now you can possibly buy down here. Okay, so you just got to be patient and don't get rattled. Okay, if you miss a move, You got to learn how to just relax, stay calm, stay collected. You'll get another move. Especially if you're watching 3, 4, 5 charts like this, one of them is going to give you a quality setup. Okay, so like me, I'm like fishing right now. See how I'm just moving from chart to chart to chart? It's just like fishing, guys. How many of you guys go fishing? You got to throw your bobber out in the water. You know, you might try one area of the pond. You're not going to get any bites down there. Maybe your bait. Maybe they're not biting on worms today. Maybe we got to put minnows on the hook. Maybe we got to try another side of the pond. And then but we'll get a bite. Eventually you'll get a bite. The fish will find you. So like us, like these breakout traders got caught on gold, and now it's on US30. They got caught, and we're right back in the consolidated zone. So there's no real trades to be made right now. A gold, okay, came down. At least we've seen maybe a higher low pushing back up. Let's see if some volume can close above here. Oil came all the way down. Maybe we look for a double bottom on oil, okay? So it came down one time. There's the neckline. Maybe it's going to come back down and go right back up. And if we close, then we get a nice test. Then there we go. It might come to us. If you're speculating, like you're going in a little earlier, you can definitely go in. But I would recommend maybe having your stop below this daily area and go in smaller when you're speculating. And then when you have good conviction of where it's going to go, then maybe you can step up your size. Okay, and sometimes the pullbacks are not always intended to come into the breakout area, but 50%. Okay, so if I'm looking at, it's right there. I kind of have the red line. It was already there remember we looked all the way over here? So you see now how this red line might come into play. And it's kind of almost half of this bullish candle. A little above it, but this is kind of the halfway point right here. So if I get rid of that, see, this is like a 50% pullback. Okay, so we'll see if it holds here. Maybe it doesn't come all the way into the green box, but it might and give us a nice retest. Next candle might be green, coming right back up. And I'm watching US30 over here on Bookmap. I see it's just trading again in between these yellow lines. So what that means is, it means it's kind of consolidating right still in between this range. So guys, just keep in mind, okay, today is a very volatile day. How many of you guys have actually traded FOMC? Okay, or how many of you guys don't even know what I'm talking about? FOMC is a once 1 month or every 2 months. It's about 8-9 times per year where Powell and the Fed rate, they talk about interest rates today at 2 p.m. Okay, it is going to be extremely volatile. This is where a lot of retail traders lose all of their profits and blow up accounts because they're not used to trading that volatility. There could be some massive spike candles. In 1 minute, you could see the security trading move 100, 200 pips in 1 minute. And if you're on the wrong end of it and you're over leveraging, you could say goodbye to your account. So be careful. It's at 2 p.m. Eastern today. Okay, we're going to be trading it live with the snipers in our private room, but it's not the easiest session to trade. A lot of traders don't even trade it. They wait till after all of the dust has settled down before they even look to trade. But us, we are scalpers. We're passive aggressive scalpers. Okay. We're patient, disciplined scalpers, but when the opportunity arises, we're aggressive. Snipers. Yeah, John, you did it 2 times with us and it was fun. Yeah, it can be fun, but it's fun when you're on the right side of it. It can be, it's not very fun when you're on the wrong side of it. And NFP too. Friday is going to be the same thing. Okay, so guys, are we all in agreement? We're still just consolidating in here on the indices. Okay, so gold, still we're looking for gold to close above all of these wicks. Okay, otherwise it's just going to pull back into here. Oil, okay, so it came down, picked up a higher low wick. Let's see if more volume can kind of close above here. And GU, it's kind of giving a little bit of a retracement, okay, coming down. If it holds, maybe it's going to buy and go right back up. Okay, and then you see like a 3-bar play on US dollar. So it came, retested the supply area and pushing down. So if US dollar continues to break down here, then we could see maybe a good bounce buy in this area for GBP USD. Maybe gold, oil could be buys continuing up here. And our indices are priming, like they're grabbing some rocket fuel down here to build and get out of here. But kind of look at weak candles. Okay, they're these little doji candles, lack of volume. You can see in here, like lack of volume, just trading sideways inside here. Okay, so Darth, please don't spam. Okay, I can read. You don't need to write 6 times about the stream quality low. Please change to 1080p. I have it on the best quality. I can put you guys on crystal clear quality, but then there's going to be a huge lag, and you guys are going to be 30 seconds to a minute behind. If you guys want that, no, it's not my internet. I assure you. Are you paying $500 a month for Rogers Ignite internet? I doubt it. So I bet you it's your internet, sir. I have Rogers on my house pretty much every single day here. So I don't think it's my internet. Anyways, if you want crystal clear, join the team, join our Zoom. You'll get crystal clear in there. You can't please everybody. Someone's going to complain about the quality. Someone's going to complain about the leg. Someone's going to complain that we're not on the right security. Someone's going to complain about the strategy. Someone's going to complain about this. It's like my kids, you know, I can never please these guys. So I'm a father, so I'm very patient, but I've learned in life you can't please everybody. I'm not going to stress out about this. Because then I ask other people, can you guys see? And they say it's crystal clear. Then you can't see it. So I have no idea. Step up your internet. Look, we missed a trade here. Fuck. Okay, oil. Man, I missed this right here because we're talking about stupid quality on this channel. Okay, did anybody step in on a buy on oil because it's respecting this area? And here's a pullback. Okay, so if you missed that big bullish candle breaking out of here, now it could be an opportunity to buy if it bounces off this demand area. Here's the actual retest for GBP USD. Okay, I'm a little late to the party, but I'm going to step in on a buy on oil. I was waiting for another pullback, but I'm going to go in. So I'm entering a buy right now on oil. Okay, so I'm looking for it to come up into the red box. Could be approximately 20 pips in here. And maybe if it breaks out a little more, maybe 30, 40 pips up there. I'm currently in a buy. I'm going to place my stop loss like below structure down in here. So let me, I'll just show you a new one. Okay, so my first buy is like kind of a smaller position, and then if there's a pullback coming back in here, I might layer in one more position at a buy at this green box, or maybe add another position down here if it comes down for a double bottom. Gold is getting rejected up here. So see over here, all of these wicks rejected 1, 2, 3, 4 times. Okay, so you can see gold is getting rejected here. We still have not broke out of this area yet. So we got to still be patient with gold. Okay, and let's take a look at indices. Okay, still inside the box, still inside the box. Okay, so I'll put this below here to show you that we are consolidating still in here. We're still going to look for buys above here. Okay, so GBP USD is inside here, didn't hold because US dollar is pushing up a little bit. So maybe it's going to come down to this level. Could be a bounce off of here and go back up. If it closes below here, we might be pushing down. Okay, we're pushing up on oil, guys. Okay, some of you guys got in a little earlier than me, and that's good. Yep. Okay, so we'd like to see it come into this red box. And everybody, please, like, you manage your account, you manage everything, okay? Because this is up over 10 pips right now. If it comes up here, we're looking about 15. But some of you guys got in over here. You guys could be up 20 plus. If you're in here, I would recommend going to a break even, because this could, yep, there it goes, okay? So it was very, I had zero drawdown, just buying here. I bought in late. I even told you guys I bought in late. I was hoping to buy down here, but again, we're entertaining questions about quality. Okay, so gold still is holding up here. GU getting a wick. So if GU comes and closes above here again and holds this demand area, could be looking for some buys. Okay, US30 rejected. DAX rejected. Okay, so we're going to focus down here. Focus on maybe a 50% pullback inside here. Let's remain patient with our indices. Okay. And we'll watch where oil is going to close in the next 30 seconds, but it's approaching that purple line. Okay, do you guys remember what the purple line was? The purple line was our previous low of the day. We broke below it, so it's coming right back up to test the purple line, which is the resistance and the supply area. Okay, so that's why if we're coming up here, you got to understand those measurements I gave you. Okay, so here's the close in 10 seconds. Gold rejected. Gold might be a double top coming down, breaking down here. And again, we can look for an aggressive scalp coming down here if it closes. Good morning, Vivian. Which account is good for a beginner to open with HankoTrade or any broker for the matter? HankoTrade. Open up a demo account. If you're a beginner, just open up a demo. Start off with a demo. Don't put in any real money in the markets until you learn how to trade with a demo account. Then when you feel comfortable, if you want to use like one of their accounts, ECN is good. It's like it's kind of like other brokers have like a raw account. Or a zero account it's called. You get the lowest spreads possible and you get fixed commissions. So that's the one I would recommend, but I would highly recommend you just start off with a demo account to get started. Once you learn, then you can deposit your money into the account, but learn first. Take your time learning. Okay, so oil came back down, retested higher low, so we're going to see if we can break out this previous high and maybe push up to here. Okay, so I'm right back in profits on oil. Okay, so I'm up over 10, 15 pips now. Okay, so I can go to a break even or I can scale out right now. You know, that's how I trade. 10, 15, 20 pips, all good. But now we're coming out with some good structure. We can maybe break out of here, grab a little more. Okay, like that move right at the top of the red box is 15, 16 pips. We might break a little higher, but there could be pullbacks, okay, because this is a neckline. So remember what I told you, okay? We came down, we're coming up. We can get rejected here and then come back down to here, or for an official double bottom. And then it does something like this. So we're at the neckline, okay? So there could be a big rejection here. I know that. So that's why sometimes I scale out at the red box. That's why I put these big red boxes so you guys can visually see these things. Like I scaled out. I closed my position up there. I got 14 pips. Closed at 14. I'm out of that trade. Why? Because it came right up to the purple line and the red box. This was all. You know how we did 90 minutes of top-down analysis? That's why I spent 90 minutes of top-down analysis to do this critical areas. That's why I use these areas. I don't just waste 90 minutes of my day to do top-down and not use this stuff. Do you guys understand what I'm saying? Like, do you guys get why I do this? Now, you know like exactly where it could go. I took that trade. I even went in late. I bought right here. I bought it late and it came up 15 pips. I wanted to buy this candle. This is the one I really wanted to buy. Then it wouldn't have been 15 pips because I would have been holding this bad boy all the way up there and it would have been over 30 pip trades. Meme, thank you for the $5. You don't have to do that, bro. Honestly. Don't do that, okay, guys? We're not here for donations or anything like that. Please use that $5 in your trading account, or do you use it, guys? Okay, I appreciate it. Honestly, I do. I thank you for it, but we don't need it. We're not here for donations. We really are passionate about what we do here. I'm really passionate about teaching, but I appreciate it. But keep that money for yourselves, guys, to grow your accounts. Thank you, by the way, thank you. It's nice of you to do that, but just focus on your trading, guys. Okay, so but you guys see, okay, so I got out, guys. I liquidated my position. This is another webinar, guys, I wrote 2 weeks ago, but we're going to have Carlos's webinar. My webinar that I'm going to do with you guys with snipers is liquidate the strength of a position at supply. Okay, that's why I do that. That was a big, strong green candle, and I closed at the high. Why? Because I don't want to get caught in slippage, and I closed at the high in supply. Okay, you know when they say buy low, sell high. That's what you got to understand. And I know 10, 15 pips, okay? I'm not expecting a massive move. I'm scalping from here to there. That's it. And then I'm not surprised about this pullback because, we maybe have to officially make a higher low bottom, like right here, or maybe a double bottom. That's the end of that leg. That's it. Now it's coming down. So it's probably going to hit someone's break evens or your stop losses. But I'm out of that trade. Get your pips and dip. This is scalping, guys. This is not swing trading. Okay, so I'm out of that trade now. So when I'm out of a trade, what do? I continue to go set up. Where am I looking for my next trade? Okay, see the bulls brought it up here. They got rejected. So now if they can pick up more liquidity down here and come and close above here, I'm looking for my next buy. My next buy will be above here. And where am I going to take it? Take it to potentially the next red zone right up there. But now that wasn't enough momentum. Now the market has to come back down, maybe pick up bids at this area. Okay, if it can't hold here, unfortunately we're coming down for a double bottom. Do you get high on your own supply? Absolutely. For everyone that is asking, okay, please don't send the police to my house. Smoking marijuana here where I am is legal. I can go to Tim Hortons and get a coffee, and right next door is a cannabis store. I can walk in there and order and say hello to the police officer and just walk right by him. Welcome to Canada, land of the free. police officer might be high himself, Ali. Probably. He probably just came out of there as I'm going in. How much is rent? I don't rent. I own my home. No mortgage. Mortgage free, thank God. But rent over here is expensive. It's not cheap. My students at my rental properties pay $500 a month for in there. And that's a cheap student rate. Other places are charging $800 to $1,000 a room. Okay, so guys, see oil? It came right up to that purple line, kissed it, red box, kiss, and drop. Okay, so I'm not surprised about that. There's traders in this group that might be surprised about this. I'm not, because it came right to the target. VM ripping. I like to keep my students happy. I do a lot for them. You know, they're exchange students from, I go sometimes on my weekends. They don't have a car, so I go out there. I take them to the grocery store. They get their groceries. I bring them back home. But they do things for me. They shovel the driveway in the winter. I don't have to go all the way out there. They cut the grass in the summertime. I go out there and I help them, so it's mutual. They're good students. They're all engineers. They're very smart. I'm actually teaching a lot of them how to trade as well. They love it. They're learning how to scalp pips. They actually want to drop out of school in engineering to scalp the markets. And I tell them, you guys are crazy. Continue to get your engineering degree, and then we'll look at pips after. Waterloo? No, they're Fanshawe students. Fanshawe College, and I have, all my properties are right by Fanshawe College. Okay, so gold, guys, we're getting rejected. Red, green, red, oil rejected there. We'll see if it can come back, maybe. But now, you know what I was saying, like about a sell position? Okay, so we came up, and now it's pushing right back down. So if it ends up kind of with more momentum, closing below this, remember that big daily demand area? They could be pushing it down there. Exactly what I was saying. They rotate it right back up. More offers come into the market right here, and they drop it. And then if it continues to come down now with more supply, and we break and close below here, then it's officially going to come into this big demand area right down in here. But you see how we cooled off the RSI, where it was down here at 10. It came all the way just above 30 to the supply area, and then they're pushing it right back down. So we're going to see as it comes down now, is it going to go, strength going to hold? Maybe we're forming bullish divergence. And then maybe we can look for maybe another potential buy again in here. So do you guys see how I just let the volume come to me? I just wait for it, okay? It's easy trading like this, guys. It's less anxiety. Like, I don't know why everyone is not trading like this. Just let the volume come to you, okay? If you took the buys, some of you guys took the buy right here. Some of you guys took that candle. I got in late to the party and still banked 14 pips. But now it's pulling back, may hold here. If it comes back again here, closes, retest this, maybe this is the higher low bounce, and then we might have momentum to come back up to this red line, the red box, the trend line, break here, and then maybe oil is going to do a move like this, down, neckline, higher low, come in here, break, maybe like impulse, pull back, and then all of a sudden it's going up to the next zone. Okay, so that is strict zone-to-zone trading. You know that book, Trading in the Zone by Mark Douglas? This is literally trading in the zone. You have to have the mental capacity to understand what's going on in here so that you can understand how to trade this type of style. Okay, so see how it's a nice bullish candle. If you don't feel comfortable taking the bullish candle, wait for it to close, look for a retest. If you miss out on the move, it's all right. It's all good. It's not the end of the world. You miss out on a green candle and possibly breaking out of here, maybe we'll catch something above here. Maybe we'll catch something if it gets rejected. What happens if it gets rejected, and we can sell it down here? Okay, so remember, you don't need to chase trades. Okay, let them come to you naturally. US30, okay, and DAX are building now, okay, so we can focus on these as well. We're trending up here, it's coming up, it's coming up. Can we get that official break above us? Over here. Okay, we're coming up again. So double bottom, down, coming back up. What time is it? Almost 5:15 and about 3 more minutes. Gold sell. If you're selling gold, you're in the consolidated area. You can definitely hit a sell in here, but might just sell, come back down here, and go right back up. So I'm looking for a sell below here. Myself personally, I don't like to trade. I don't like to trade too much inside here in the chop. So oil coming right back up, holding. GU. Okay, so holding this area. So maybe we look for a potential buy above here. This zone is red again. We're below it. Could act as pressure to push down. What's US dollar doing? Trading sideways. Red, green, red, green. Okay, and also like here, I look at Bookmap. I see what US30 is doing. It's accumulating. It's accumulating. We're below the VWAP, below this area. See here the yellow line. Now you see where the heat is. 833,855. There's 17 offers up there. 33,840. 28 offers. Where are all our big bids? They're below here. So what looks more like, who looks like the aggressor or the pending orders? It looks like the sellers. It looks like there's more offers in the market, but these could be fake offers. Like when the volume comes in here, these things can get pulled, and then all of a sudden it's breaking to the next one, and they get pulled, and then it's continuing to drive. We see that a lot in New York. It's got to be where there's a lot of volume. Osama, how can you get Bookmap? Just visit bookmap.com. We also have a link in our description. You can click on that. It will take you directly down there. And we also have some promotions going on if you're interested in it. It's if you want to basically take your trading to the next level. It is a little bit more advanced. It takes time to learn a depth of market. It's not the hardest thing. I'm sure you guys have learned much harder things in your lifetime than just reading a depth of market. It's like an auction. Here are your offers, here are your bids. And then the bubbles show you like the transactions, and then who has bigger transactions. So obviously the green bubbles show the bids, but they show how they bid into the offers. Okay, like here, this was a big move of bids, but they bid into all of those offers and then they got pushed down. So this is trapped liquidity in here. You know, when you buy an impulse candle and you get caught and then all of a sudden the market moves away from you, that's you. You know, I was here yesterday on one of the calls. I was trapped liquidity, but thank God it came back up and got me and then continued to the highs. But these guys are in the market and the market moves away from them. So what happens is you're in drawdown. And when it moves really far away from you, what do? You're forced to hit your stop loss, or you're holding a trade in drawdown and hoping for the best. So these guys up here that got trapped, the market is trying to come back up to them and save them. When it comes back up here, then they're going to be at break even. Then these guys might add more liquidity in the market. They might maybe add another buy, and then we can cut through these offers, and then we might get a new higher high in the market. There's a lot of psychology that goes on in a depth of market. What's going on here? Because these are just pending orders. These are not active orders. They're pending. They're resting. The only thing that triggers these is market executions. So when we figure out who the aggressor is the aggressor the buyer or is the aggressor the seller? That's what will activate more orders, and then the market will move in that direction. So right now, we don't have like a real aggressor in the market. It's just trading sideways. That's what consolidation is. So we're going to focus also on these indices, guys. I promise the markets are going to get better leading into New York. They're going to get really, really interesting leading into FOMC. Will gold push to 2070? Absolutely. It could potentially get up there. We could break all-time highs. next few months, some analysts are calling for 2,500 an ounce on gold. If banks keep collapsing and US dollar keeps dropping, we could see gold 2,100, 2,200, 2,300. I like purchasing physical gold myself, and holding. It's a nice hedge against inflation. You hold, hold, hold. Silver, guys, silver. How many of you guys own any silver? Silver's really good. Silver actually has a bigger return than gold in physical. Yeah, there's a Anton, I agree. There's a pending. Sorry, Zegmar, gamer, Z gamer. There's a balance between sellers and buyers. Yeah, so it's just the markets are moving sideways. We can't force trades right now. We can't. Like, unless you're speculating, unless you're taking a small little buy. You're moving up with this market. You could be doing that. But if you're waiting patiently for a confirmation, we got to wait to see it. Bulls actually break it out of here, close above, retest this. Maybe then we can take a buy and then come up to here. It's building. US30 is building. DAX is building. Gold is building. US oil looks good again. Nice big bullish engulfing candle. Could maybe add it like another position in here. But I'm going to wait. I'm going to look more for indices now. Yeah, nice double bottom holding. Okay, and gold too. Let's see GBP USD. GBP USD is holding, coming right back up. So if GU can kind of close back above here, maybe we'll make a high. If we close below this green box and get a nice little retest, maybe we're going to push down to the next green box. And remember, we measured that move. It's about 10 pips coming down there. Okay, US dollar is just moving sideways right now. Yep, oil looks good. See the pullback going back up. So we might come back up with more momentum to potentially break here, that area, for a new higher high. It's a beautiful double bottom. Okay, so watch gold, guys. 45 more seconds to go, and I'm going to watch indices over here. We all got to trade together, guys. So if someone can watch gold, someone watches oil, someone watches GBP USD, I can watch indices. I only have 2 eyes, and there's 5 charts. So it's a lot for me to. So if everyone is looking, we can work as a team together. This is how we used to do it back when, before YouTube even started, when it was just like me, Dave, and Yoda. We were trading together on Zoom, the 3 of us. I would watch like my 2. Yoda would watch his 2, Dave would watch his 2, and we'd all, trade together. That's kind of how we want to do it with everybody here. So you guys help me, I help you. We're all good. We can grab some pips together. We can all learn together. We'll take some losses together. It's part of trading, guys, Chuck, some say gold is better hedge against inflation than Bitcoin. What's my take? 100% gold. It's been around since, the beginning of time. So gold is precious. It's an actual physical metal. I can trade with it. I can take a gold bar somewhere and trade, like go to a pawn shop and actually. Bitcoin it's an asset of the future. But right now, if you ask my opinion, gold, precious metals right now. Bitcoin could be the future, but right now, physical gold. Like you have now the BRICS nations backing their currencies with gold. They're not backing it with Bitcoin right now. Look at which country in South America went all Bitcoin. Was it El Salvador? If I'm not mistaken. One of the countries in South America, they went all Bitcoin. So, just if it was like that, why are more countries not doing that? So, yeah, El Salvador started it. I'm big. I'm a collector of Bitcoin, believe me, as well. But if you ask me for either my opinion on gold, I would say, but Bitcoin could be the future, could be. But it's getting regulated now. We'll see what's happening in the U.S. Like, I don't know if you see Biden. Biden is trying to pass a bill for 30% taxing Bitcoin and things like that. Okay, so let's watch, guys. We're moving bullish on US30 and DAX over here. Okay, so let's see. We got 3 more minutes. So this is where impulse candles break out. Okay, so if we want to go in, you're going in on an impulse. You see right here what's happening. See, we're at the VWAP. We're right at this critical area. We keep coming up here, but maybe what we got to do is we got to get an official break. We got to get a higher high break. Like these bulls in the market, buyers, need to prove to me that they can break some previous high. They're right there. If they can't break it, then it's showing like that they're still weak. Thank you, Mohammed. I appreciate that, bro. Okay, so again, looking at gold, rejected again. Have we closed above? No. Oil looks good. Oil pullback can continue to come back up here. So if you're in oil, continuing to hold, or you got in a second buy, it could come all the way up there. It's a nice, beautiful double bottom. GBP USD could be coming down. Let's look for a close and a retest and watch GU. Nice head and shoulder pattern forming on GU. Left shoulder, head, right shoulder could be finishing off and dropping down here. So I think we're going to get some moves in the markets coming up very soon, going into 5:30 in the next 6-7 minutes. Okay, but you see here, guys, see like the Bookmap, see we're having a difficult time getting above this VWAP. But we've got nice bids below us. But where's the big offer in the market? Right here, 840, 17 offers. So what I do is like I place a yellow line up here to give us heads up here that if it breaks, here we go. Okay, so this could be the impulse break. There's 60 seconds left on the candle. So if you don't feel comfortable taking this impulse because it could get rejected and it could be a fake out candle, let's wait it out for 60 seconds. Let's be patient. Unless you want to hop in on an impulse, it's up to you. There's always a time and place when to take an impulse. The build up is leading up. It's kind of got a higher low. It's on a trend line. It could break out for 10-15 pips. It absolutely can. But it could also get rejected and come right back down and close below here. Yeah, like that, how it got rejected. So when in doubt, if you're not comfortable, just let's wait it out. Okay? Look, I'm waiting. Okay, 30 seconds. And it got a wick. So sometimes if you go with it, you got to understand you're in the trade. You know, that's the gamble you're taking on these impulse candles. And then sometimes they go hard, you know, like in New York. Okay, we'll look at gold, but right now let's watch the close of these candles in the next 10 seconds. Okay, so there's the close. Okay, retest. I flip the zone right away. Okay, I see if it will get a nice little wick and break the high, and then I can go into a buy. I'm already on my MT4, fingers on the trigger on US30 or DAX, ready to potentially buy. But I'm not buying a red candle coming down bearish right now. I'm waiting for a nice wick. Okay, so we waited for the close, and it's a big red candle coming down. So no buy yet. We got to see it bounce, get a wick, and come right back up. Okay, see it's a fake out. Look at US30. They came up here, and then look at it. It's a fake out. Clean fake out. So if you bought that impulse, unfortunately, you're holding in drawdown right now. I didn't buy no impulse. I said I'm going to wait it out 60 seconds. And look at the big drop now. They're moving the market away from you. Plant, we'll get to you. Our website is under maintenance right now. If you've emailed us, just give us some time. You know, we're across the world from you. I just woke up myself right now and I'm trading live with you. Dave is still sleeping. So we will get back to you guys. I promise you. Okay. Appreciate your patience. Okay, so now we came down, we picked up a wick. Okay, but US30 is pushing down. Okay, so let's take a look at gold. Okay, so gold, again, did any volume close above? No. So we got to continue to be patient. Okay, and oil came up a little bit, still holding in here. Might need to consolidate, might push up. But if oil breaks down, could look for more continuous selling pressure. Remember, the overall trend for oil is bearish. Okay, we established that. There's our trend line. We came up to the resistance point, pull back. Came up again to the trend line, continue push down. If it sells down here, you can look for a potential sell down there. But if you want to look for the better one down there, you wait down there. GU breaking down. That was an impulse. It broke down, coming right back up. You can get a retest. If it gets rejected, then you can go into a continuous sell coming down here. But let's focus on these indices right now. So big rejections. Are we clear, guys? Do we understand that that was a false breakout? And I bet you I'm going to ask in the group how many guys bought that impulse candle. And I guarantee you some guys bought it, right? And you're holding in drawdown right now. And I understand. I know it's exciting watching that green candle getting up there, and you want to hit that. But like also my psychology as a trader, I look at this as I was very, very patient. I could have taken that impulse. I didn't. If I did, I would be in drawdown right now. Let's measure the move, okay? If I bought that candle breaking out, I would literally be in 15 pips drawdown right now. So I chalk that up as a win, like as a psychological win. I didn't hit the buy and sell button, but I had my finger on the trigger and I was ready. And me holding back, I look at that like I just saved myself maybe 15 pips of drawdown right now. So you guys got to look at trading like that too. Sometimes when you make a good decision, you gotta improve your confidence. That's good. So if you didn't buy that impulse candle and you're waiting for the retest, that's good. You should be happy for yourself. That's not easy to do that as a trader, especially scalping these markets, because we're going to get presented with hundreds of impulse candles throughout the day. Wes, the US30 1 minute was double top? Yeah. See, I didn't see that, Wes, because I wasn't looking at the 1 minutes, but if we look at the 1 minutes, there's the double top. Came up, back down, came back up, and pushed right back down. So we'll see. Now look at like DAX came up, back down, coming up. We'll see maybe DAX is going to be like a double top and push down into here. So maybe the markets are going to move now bearish, coming down, continue to come back down into here. Yeah, it was a fake out, not a breakout. Yeah, you're right about that. Okay, guys, so I'm going to be going for one more hour, guys. It's 5:30. I'm going to go till 6:30, because then at 6:30 I'm going to go to Tim Hortons, grab a coffee. No sleep for me, because 7:30 we start our official live New York Wall Street session that we go till just after 10 o'clock. And then my man PK is going to take over post New York, and then I'm going to get a little bit of a break, and then I'll be back for live FOMC with the team. So lots of trading. And then we have our webinar with Carlos tonight. He's going to share his trading journey and what's working for him, how he overcame a lot in his journey, and he's doing really well. So he's going to share that with the team. Yeah, shout out to PK. I came on his Asian session last night while I was watching the Knicks game. So yeah, he's doing analysis and everything like that. It's awesome. So okay, so the market got rejected, coming down. Let's take a look at gold. Okay, so gold again, impulse break, rejected, coming down. Did any volume close above here? I don't see any. Okay, I don't see anything above there. GBP USD pushing down, ignited candle. You could potentially be in a sell. I would place stop loss above this red box, maybe up there. Maybe we can walk this GBP USD breaking the low and coming all the way down here with the strength of the US dollar, maybe pushing up to here. And it's 5:30, so this is a new 30-minute candle in the market. can I explain a little bit what's going on to the right? This is Bookmap. Okay, again, it's a live liquidity feed of the futures market. These are futures contracts. We're looking at YM, which is the Dow Jones, and this is the depth of market. COB is the current order book. So this is what pending orders are currently in the market right now that we can visually see. The ones above us are offers, and the ones below us are bids, pending orders waiting to get activated. SVP is session volume profile. So some of you guys that use volume profiles that are familiar with that, this is like a depth of market volume profile, showing where most of the bigger volume happens. Like you can see up here, when there was some transactions up here, it was on light volume. In here, you see where we're consolidating, it's on heavy volume. Okay, you can see this, how big it is here. When we're coming down here to these lows, like here and here, it's on light volume. Okay. Yeah, but don't be just looking at bubbles, guys. Okay, this is not trading bubbles. This is not a video game. This is not like popping bubbles over here or which bubble is winning. The bubbles just represent the transactions. Okay, so but don't be just trading because you see green bubbles. Diego, when's the webinar? At the same time we do it all the time, 6 p.m. Eastern. 6 p.m. Eastern. Okay, and this white line, this is a very important white line. This is what is called the VWAP. How many of you guys are familiar with what a VWAP is? Okay, it's the volume weighted average price line. Okay, so a lot of institutional investors use and follow the VWAP. So it's kind of like a magnet for price where you're getting fair value. So if it's below the VWAP, it tends to be generally bearish, but the momentum wants to come back and react at the VWAP. When we're above it, then it's bullish, but the pullbacks want to come back and liquidate or consolidate at the VWAP. And so if we're above it, we're considered to be bullish. If we're below it, we're considered to be bearish. It's kind of like a moving average, like kind of like a 200 EMA, but this one factors in volume as well price. That's why it's called VWAP, volume weighted average price. Okay, so US30 came down, back down to this hourly demand. Again, we're just trading inside the box. We can scalp in here, but it's not the greatest. Okay, it's not the greatest. So unfortunately, like myself, I'm waiting. I've only taken one trade today, that oil one, but I know that there's a lot of day left, like, you know, so that's why I'm not forcing any trades myself, because I'm going to be trading New York Wall Street. I'm going to be trading FOMC. I'll be scalping power hour in the car when I go pick up my kids on the phone on the 1 minute candles. I do that too, guys. Okay, so I'm a scalper. I scalp on my mobile phone. Some of you guys that don't know me, now you know me. I'm at the grocery store. I'm that guy at the grocery store that's scalping on his phone. You know, some people ask me, what are you doing? They see me with all these, like they see my screen. I tell them I'm scalping. Sometimes in the grocery store, I'm teaching people about scalping. They don't even know what I'm doing. Tell them I'm making money. It's interesting. People are fascinated by it. I'm like, I just made $100 waiting in line. You can pay for your groceries while you're at the grocery store. Power hour, make some fun moves. You know, I'm picking up the kids and I'm scalping. I don't recommend it. Don't scalp and drive in the car. It takes experience. No, I don't use self-checkouts, V. No, I wait in line so I can scalp. Self-checkouts take us away from my scalping. Okay, so guys, you see guys right here too. So we could look for a potential sell right here, okay? Below the purple line, okay, like right here. It's holding some support right now, but if this breaches and this breaks, we could look for a potential sell coming down in here. Okay, and I measure the move. Always, before any trade I take, I measure the move. If it moves down to about here, we're looking at about 12 pips. If it can move to the bottom, it's about 20 plus. Okay, so I always measure the move. Same with US30. Okay, we have a big down coming down. Okay, it could drop. If it does, let's find our pivots. Where could it come down to? Right here. Here's an area, a lot of wicks. Okay, it could drop all the way down to this red line and go right back up. Where's our next one? Okay, so for a scalper, we want to know right here. I see the wicks. Look at all the wicks. I can extend it to the left right there. So now I've kind of made my own grid. This could be like TP1. This could be like TP2. Purple line below, TP3 plus. You should have a trailing stop loss and hope for the best down there. But we could be getting ready to sell. Look at how the market is coming back down to this critical yellow line. We haven't broke this since London, 3 a.m. We came back down here, 4 a.m., 4:30, couldn't break. We're coming again now, 5:30. So you can see the offers are pushing the market down. Every pullback is going down. Pullback is going down. See, we're below the VWAP. Here's the break now, okay? See the big transaction bubble? Because now we're breaking a critical area, okay? So now this is like an auction. Lots of volume now, okay? So look at the close of the candle, 90 seconds now. So I'm going to watch for the close of the candle. We want to see a break down, and then we look for a pullback, and then continued selling pressure. But we also have to watch, because here are the bids. Okay, 783, there's 29 bids waiting to get activated down here. So it could come down, pick up those bids, and go right back up. But when it comes back up, where is our resistance? Another yellow line is like right here. Okay, see how it was support here? Turn to resistance right here. 33,807, I've got 11 offers, and above us we have 11 offers, double-digit offers. Okay, but they could come down to pick up this liquidity down here. It could be like an impulse candle come down, catch a wick, and be a fake out and come right back up. So let's be careful. We've got 40 seconds. And when was the last time we took out this low? It's been a long time. Okay, look at the big drop coming down over there. And then you know where those pending bids are waiting? They're waiting right here. Those pending bids are at that first red line. So I wouldn't be surprised if we maybe get an impulse candle coming down here, or a push down to this red line, and that's kind of where the bids are waiting right in here. Okay, so let's watch also DAX. Here we go, guys. Okay, so here's the close. Okay, did we close below? I assume that this candle is going to open green, come back up, because it's picking up these bids in here. So this is where we get a pullback candle. Where could it pull back? Maybe 50% of the red candle. Okay, and then if it holds supply down there, we're going to push down and maybe continue to push bearish. I can add moving averages too. I don't tend to always use moving averages or too much indicators, but our 200 EMA is up here. There's a nice rejection. So see when it came up, we're breaking a new low. Okay, so if it continues now to push down, we could potentially look to sell this. But just wait it out a little bit. Let's see what happens, because it's coming down for some more bids. And DAX also is gearing up to break down. I'm going to go into sell. I'm going to enter on a sell on US30. Okay, myself entering. It retested. It's breaking the low. I'm going in a sell. Take it down to that red line. It's about 10 pips. If we can go down to the second one, we're looking about 20 pips. Okay, so I'm in a sell. Okay, so I want to see these offers take out all of these bids down here. There's going to be pullbacks. Okay, remember, there's going to be pullbacks. Pullback could come up to here, could come up to here. But we want to kind of see it hold below this area. Below here if we can hold. Okay, and then like stop loss, I can place it above the 9 EMA, above that candle. I could go a little higher above those candles, and I'll reset this, guys, sorry. Okay, so I'm in a sell right here. I took it. Stop loss. Again, above 9 EMA, above structure. Some traders will go above the next supply zone. Okay, so it all depends how much you're willing to risk. That could be that's not a good risk to reward. So we kind of want to go for a 1-to-1 minimum on a scalp. How do we know if it's a fake breakout or a real breakout? We don't know. Like we got the lower low break, we got the volume kind of closed below there, the retest. So I'm in a sell. I'm drawdown right now. It might just pull back up to the offers and go back down. Pullbacks do happen. But if I don't like it, I don't have to wait for my full stop loss to get activated up there. If I kind of see things I don't like them right away, I kind of close trades right away. But I give it a little room to breathe. Even 50% up here. You got to give it some room to breathe. Okay, and then I judge what happens here. It's a good question, but it's, like how Carol said, that's the $1 million question. If we all knew, then we'd all be making pips every single candle. Okay, that's like judgment. Okay, so now we're retesting 50% of the move. Okay, so if it kind of doesn't get rejected there, then it might engulf the next candle. But you can see it might come up to where these offers are over here. And then it might just come up, get absorbed by offers, and then continue to push down. And a lot of things tend to gravitate towards this 9 EMA. Like they want to come up and touch that green line and then get rejected going down. I'll add the lines on DAX over here. So we're rate trading at the EMA. Gold. Sorry guys. Okay, gold. It's getting up there. Gold is slowly getting up there. But we need gold to close with a bar up there. Oops. Oil, you can extend all these across for oil again. You can look for buys above there, sells below there if you like. Okay, gold is coming up. Watch gold in 10 seconds, guys, how it will close. Now watch also US30 over here. So gold, real quick. Okay, gold. If gold hangs around this area again, right at this neckline, and builds a little bit, this is where it could be like an impulse candle building. So this is where you could potentially look for a buy on gold. As soon as it kind of breaks these two wicks, it could fly right out here. Right here. Okay, gold looks like a potential breakout right now, okay? So if it breaks out, I'm going to go in a gold buy above here. And then what I'll do is I'll place my stop loss below the structure right there, and I'll look for gold to come into this red supply box. Up to those previous high wicks right up there. Okay, only if it starts to break out of here. Okay, I'm not going in yet. Only if it breaks out above these wicks here. Okay, so oil pulled back, continuing push down. It might get that big bottom down at this white line. Okay, so watch gold, guys. I'm going to take the buy if it breaks out of here. Okay, it's approaching there. Yeah, I'm getting ready, guys. I got my finger on the trigger. I'm going to take the buy. Okay, as soon as it just breaks a little bit, just a little break, I'm going to go for that new higher high. See how it's holding right there? It's holding, holding, holding. Okay, see it's still not there. It's coming up there. As soon as we get that break, I'm going to hit the buy button. Yep, one little squeeze, I'm in. See how it's just hanging out there? Okay, I'm in a buy now. Okay, I'm going in on gold. So I'm in a buy. I'm going to place my stop loss kind of below those wicks, below that structure. Right down here. Okay, and then I still got to manage this US30 trade. So I'm going to see how it will react at this 9 EMA. I'm also watching it over here on Bookmap. No, I do not use buy sell stops. I do market executions myself. Sorry. Yeah, I do market executions. Okay, so we want to kind of build off this candle. Next candle is probably going to pull back to retest this green box, maybe a little lower. Unless we can close above here, maybe we retest this area, then we'll push up. But I'm not going to be surprised if we pull back. Like this is the first real body closing above here. So then naturally the market may rotate back down. So that's why I'm giving it a little room to breathe. But hopefully we can close strong, maybe get a retest and then just break out of here. We'll see what happens. One more minute to go on it. Okay, I really got to manage this US30 trade. I use a mental stop loss, guys. I don't use like a fixed hard stop loss. I use a mental stop. So just want to see, because sometimes I close trades really early and then the next candle comes down red. So I'm really watching this right now. Okay, 20 seconds to go on the close. So if we get a wick on this, I'm gonna close this trade. Okay, if it gets a wick at the 9 because it's gonna move up, come up to here, I'm gonna close this. Okay, so far it's red. I want to see is red candle coming down. No, so this is possibly gonna break out of here. So I'm gonna close this. Okay, so I'm closing US30, taking that loss on it. I don't want to trade in this consolidated area. Okay, so I closed out. Could I have given it more room to breathe up there? Yeah, I could have, but I don't want to take that chance. Okay, that was a 17 pip stop. Gold is retesting this breakout area. So that was the higher high break. Oh man, oh my goodness, see, that's what I hate. Sometimes my stop is just too tight where I got stopped out and now the big red bar comes down. So see me, if I gave it maybe 3 more pips to 20, maybe I would have been safe right back into this. But, woulda, shoulda, couldas. I don't trade like that. So came down, maybe picking up a wick. Maybe it's going to come up stronger. But if it continues to come back down and kind of, if it closes back below that area with more red volume, I'll enter right back into the sell down here. But that one I got stopped out. Sometimes that happens. Sometimes you get stopped out right there, and then it comes down red, and all of a sudden you're shaking your head. But situations like this, it could come down, pick up a wick, and turn this into a hammer candle, start to break out bullish above here. So I can't always assume what's going to happen, but I got to manage my trades. So gold broke down, came down to the trend line, got a wick, going right back up. So if gold is building, we need to build again, keep volume above this green box, above this daily yellow line, and then build up here, and then maybe we're going to get that nice push on gold. Let's see what GBP USD. We haven't looked at this for a while. It's just trading inside here. Banker knows my stop loss. Bankers know everything, okay? I'm a retail trader just like you guys, so my average stop loss is 15, 20 pips. That's standard for everybody. I don't think it's a surprise for anybody that we're trading with a 15, 20 pip stop loss on indice. I don't normally trade with like a 50 or 70 pip stop loss. I'm normally 10, 15, 20 pips, how the structure is moving. But it's okay to get stopped out, guys. Like, it's not, I know a lot of people look at it as negative, you got stopped out. I don't, okay? I look at it as sometimes it's a right thing to do. If the trade is not going your way, you got in the trade, you gave it a little room to breathe and get there, but if it's not going, that doesn't mean you got to sit and hold the trade and just pray that it's going to go there. Because look now, like, we're closing above critical areas, and this could be a bullish move breaking out of here. So I could get ready to like buy the market, take my stop out, okay, but then reverse and go into a buy. But I don't want to just buy here because it might come up a little bit more and then go back down red. So now I'm going to wait for the official buy above here. But DAX is getting ready as well. And then we're getting close to 7 a.m. Sorry, 6 a.m. Man, I thought it was 7 a.m. Yeah, gold sucks right now. Holy. And if gold can come back after picking up liquidity, going to 6 a.m., closing above here and holding this area, I may add another buy on gold. Yeah, oil is like a double bottom. Okay, big double bottom. So oil again coming right back up. If it closes above here, comes back, holds this box, you could go back into a buy on oil. Okay, there's the close on oil. Look for maybe a possible retracement coming back down. It's an ignited candle. Yeah, it's an ignited candle breaking. Okay, so it could continue to go up, but if you're waiting, if you get a little wick, come back down. This could be your entry point if it does come back down. But sometimes candles do not come back down. They hold this ignited bullish bottom, and then it will just continue to drive. But now it flipped red. Let's see if it will come down and retest $70.10 here. The official yellow line. Yep, US30K. I can see it breaking out of here. So now I look at it, I'm happy I got stopped out. Could be breaking now bullish on DAX, guys. Oh man, there's some tempting trades to take right now. Okay, so oil could possibly come down for a retest. Gold is building to get out of here. It's still building. Liquidity grab, still higher lows are healthy. Could get an impulse breakout above here as well. We want to break out, close above, maybe catch a retest. Maybe I'm going to go into a second buy on gold. I'm going to add another buy. And this is the retest on DAX. Okay, so hold, retest. US30 got rejected. Okay, so indices are have indecision right now. Spin top candle. Let's see if it holds. And also, we're watching gold as well. Going into 6 a.m. This is another turning point in the market. 6 a.m. is a new hourly candle. It is a big market open, 6 a.m. So what naturally happens is some trades can go against us. 6 a.m. can open and gold can come down here. And then, maybe stop hunt. Maybe they could take out some pending orders and then it comes right back up. Okay, so we have to be ready for that move if that happens. You have to prepare yourself for that. So you got to know if you're in this trade in a gold buy where your stop is. Okay, I'm going to stay below here. GU is moving. Yeah, GU is coming right back up for 6 a.m. We'll continue to watch this area for buys above here for GU. Maybe sells below here in 6 a.m. US dollar is just consolidating, not doing anything in here. 6 a.m. we'll bring in that momentum. Okay, so oil, see the retest held. That's a buy. Okay, came down to the green box. You can buy, stop loss 50% of the green candle or below the big body. And then if you're holding this, can continue to come up, test this red box again. Okay, so we got 90 seconds to go, and we're going to hit 6 a.m. Later, Wes. I'll see you in FOMC. Take care, bro. Okay, so gold is moving. Let's see if we can get a new higher high going into 6 a.m. Okay, that kind of kills momentum when we don't get a higher high. We get like a lower high just below it. It kind of kills momentum. So naturally the market will come down. We're about 20 seconds to go into 6 a.m. and we might get a red candle open and come back down. Okay, so just be mentally prepared for it. Okay, hopefully that's not the case. Hopefully we can maybe close near this red line, maybe it's small retracement and we break out of here. Bullish. Okay, so we got rejected, no close above that area. We didn't break a new higher high. Here's the new 6 a.m. candle. I'm going to assume it's going to flip red, come down. If it holds green, that's good for us that are in buys. We want it to hold green, but I think it's going to come down, maybe flip. Similar to like what oil is doing. Do I have analysis for German 30? Yeah, it's this chart right over here. German 30. German 30 looks like a potential buy. Okay, if it holds this area, could be looking for buys. US 30 above here. Okay, so oil is retesting again. Man, can gold get some volume to break out of here? Okay, we're coming full body now. Can we break that new higher high? Let's get above 2017 and 50 cents. I'd like to get that push. Hopefully we get that gold break. Okay, and indices, guys, one more time. Indices got US30 got rejected at the supply, the 200. DAX is just consolidating right at this area. And gold, man, wow. Okay, so we got to get above these highs. Weak hourly open. Normally we open up 6 a.m. with some nice volume. Okay, so you see this kind of structure that we had, that was kind of this rectangle resistance area. What we can do now is extend it across, and this could be acting as like a zone holding inside here. And if it comes back down, we got some bids to pick up down here. Okay, so gold is trying, guys. We're attempting. I'm in a buy. We're trying to see it break right here where my cursor is, 2017 and 50 for that new higher high break. We have about 2 more minutes to go on the candle. So we'd like to really just penetrate right through here, break for a new high. Then when we get our next candle, it'll be a pullback, but hopefully we're pulling back down into here or this red line, and then we're continuing to push up. But we got to break that new high right there. Otherwise it's going to get rejected and come back down. And we're going to have to go through those motions again. See the wick? Exactly. Right there. Okay, we need that new higher high to populate the bids below us for gold. You gotta keep it going. Higher highs, higher lows. Higher highs, higher lows. Otherwise, like right now, I can tell you that more offers are populating the market on that rejection. So it's critical that we get a new higher high or we close above that red line. See how big now the bubbles get at the VWAP? This is heavy transactions. Lots of, look at all the volume, okay? See how big over here, the volume profile is? Okay, so DAX is holding up here too. Okay, so DAX could be breaking out. It held 1, 2, 3 times the green box, could be getting ready to break out. If you want to wait for the 60 seconds again, maybe you wait it out, 60 seconds. Maybe if it catches a retest one more time, you can get in. The next candle could be ignited, you can get in on a buy. But if you're not in right now, wait it out 60 seconds. 40 seconds, you can wait it out. $30 more seconds to go in the close. The last 30 seconds of a bar shows momentum, guys. It's very important. We're not always going to get good volume leading into FOMC. So the market is waiting for FOMC. So if you guys see that it's not the best volume to be trading, then don't force trades, guys. You can wait for New York. You can wait for FOMC. You can wait till tomorrow. Okay. Well, we have a lot of things going on in the market this week. FOMC, Apple earnings tomorrow, NFP on Friday. So don't be forcing trades, guys. If it's not going your way today, don't be forcing. This is where you can potentially look for buys on DAX. Okay, so gold didn't break above here. The 2017 50 double top, tweezer tops. Okay, so naturally it's got to come back down, pick up bids without breaking any critical support levels. It will be like we cannot break critical support levels. Then we're going to start to push down into here. We don't want to do that. We want to still keep this trend moving. It's not easy trading right now. It's very low volume in the market. It's very choppy. Okay, so that's why. Just do not over leverage until we get some good volume in the market. See how weak the candles are? They're very weak right now. It's a very choppy range. Don't force trades. You don't need to force trades. Okay. This over here is Dow Jones. This is YM, is the futures contract for Dow Jones. That's what I'm watching over here. Okay, so now US30, see it's approaching the supply zone, the 200 EMA, the top of this resistance point. We're approaching that, we're getting above the VWAP, so it's looking good. US30 is looking good. But let's get that close. Okay, close above this area. Okay, now it's pushing up. Let's look for that close. Strong close. That's why I took my stop. Okay, for particular reasons like this. I got stopped out right there. Had I been holding, now I would have got stopped out possibly up here. So sometimes if a trade's not going your way, you get stopped out. Look at now the big rejection. Okay, so no, they're just toying with the market right now. They're just playing. So just be patient. It's a tough market right now. Even gold getting rejected, coming back down in here. If we lose this yellow line, 2016.60, then it's going to drop down to maybe 2016.25, down into here. And I kind of don't want to lose this structure. This is 50% of this big green candle and holding this wick and this wick. You know, we don't really want to lose this area right here. Because if we do, high probability it's going to come back down in here. Yeah, Edward, get some rest. I'm going to be, like, I'm super tired myself, guys. This is a long day for myself. I'm not, like, normally I take a nap at this time when I'm done this, but I'm just going to go grab a coffee, and we're going to do our New York session, and then just a small break for me, and then FOMC. So I got to have some energy for all of those sessions. Yeah, so gold got rejected, unfortunately, guys, up here. Lots of rejections. 1, 2, 3 rejections coming down bearish. So if we take out these lows down here, that's like, you can have your stop right there if you like. If you're giving it a little room to breathe down here, you can have it open. But if we start to lose all those physical support levels, it's going to drop. US30 rejected. DAX is holding support up here. But still, I'm not convinced with this volume. There's not a lot of volume in the market. Okay, that's a good rejection on right at the close of gold. It came down. Good, big, look at quadruple rejection. 4 wicks right at this area. 2016, 444. Okay, rejection. That's good. Okay, but now it closed again above that demand area. Can it be a bullish candle coming through here, coming back up? Man, gold sucks right now too. Gold trades much better leading into New York. Approximately 8 a.m., 8:20 when COMEX market opens up, and then obviously always around 8:30 when there's 8:30 news in the market, then leading into Wall Street. No, Rakuto, London is not in our favor today. Nope, it is not. Okay, so, you know, it's one of those sessions. Okay, so I'm like on my close screen. I'm getting ready to close this trade. It's approaching. That's how much room I gave it to breathe coming down here, because if it kind of loses this, it's going to come tap this box, and I don't want it to be in a sell and it breaks down here. So I'm giving it just down here. I'm on the close screen ready. Yeah, I'm closing the position out of it. That's it, guys. That's like my two. I had 3 trades today. One was positive, 2 cancel, like 2 losses. So I'm down a little bit, but that's it for me. Like I'm not going to continue trading. Because I'm going to be coming back in New York, Wall Street. That's when I really like the volume at that time, and FOMC. So this London session, it's not for me. I'm not going to continue trading this garbage. I'm down 20 pips for the day. I'm confident that I can recover 20 pips, so I'm not really worried about that. Like one candle in New York, I can recover 20 pips. So, but the thing is, I don't want to continue to trade because I might get more frustrated in the market, and it might affect me when I actually trade coming into New York. So, I've had the first trade was good. The next 2 I got stopped out. So I'm net minus 20 pips right now. But I have to come back with the confidence in New York to get those 20 pips back. But if I continue to trade this is what like happens with the market. Then we see there, okay, I got stopped out. Now I get mad. I got stopped out at that wick. I buy. Now I buy. And then all of a sudden it comes back down all the way down here. Then I can make matters worse for myself. And so you guys probably go through this too as traders, so you got to learn at some point to walk away. If you want to continue to do this, like me, even going getting a coffee, I'm walking away from the charts. I'm going to collect my thoughts and come back more mentally prepared for New York, as opposed to just sitting and taking trades. Yeah, it's a tough session, guys. Normally, London is very, very tough to trade before an FOMC, or before, like we'll even see Friday morning. I can pretty much guarantee that London is going to be very difficult to trade on Friday morning, leading into NFP. Normally, London is very flat, choppy when we have big news announcements. The only thing that's really, really moving is DAX a little bit. Yeah, like this, like that hurts me seeing that. That's where I just got stopped out. And it was kind of, again, if I gave it a couple more pips, could I have been in the trade? Yes. So, but that's where these things kind of affect you. And then you get rattled by this. Then you'll come back and you'll take a revenge trade up here. And, then maybe that'll go against you. And now you're down 30 or 40 pips now. Yeah, Victor, trading in the zone is really good. Trading in the zone is really good. Okay, like GU is doing nothing in here, just building. The US dollar is not even moving. I thought like my I thought the DXY chart was just dead. I thought it was under maintenance right now. I think the best thing for everybody is to wait for approximately 8 a.m. to get into watch what's going on in New York, because we do have folders coming in New York over here. We have 8:15 non-farm employment change, red folder. We've got Wall Street at 9:30. We have 10 a.m. ISM manufacturing, and then the entire world and the market financial world is waiting for this. What is US going to do with the interest rates? This is what the entire day everyone is waiting for. So careful trading inside here. You can see that London is a very, very tough, choppy session. Opposite directions. We're moving. DAX is bullish right now. while US30 is consolidated right in here. Yeah, FX Bank, it's FOMC. They could be trapping, yeah, traders right now. Yeah, you're correct. So that's why, I took two losses myself. So that's why I'm calling it quits too. I don't want to continue to trade and do some silly things to my account. So I think we'll get much better volume in New York. But you guys understand, like, I'm down 20 pips. I have the confidence, and you should have the confidence too, to come back from 20 pips, no problem. Like, that's one trade. But if I was down 50 pips, 75, 100 pips, that makes it difficult to come back from. So I want you guys to understand, like, all of us, we go through this, but learn how to control your emotions. Like, learn how to walk away sometimes from the market. If like sometimes when you go down, So I in the past I had problems with that. I would stay trading. I would revenge trade. I would up a lot size. Now I would double my lot size to make up for my loss. How many of you guys do that? Like I'm guilty of that as well. Like, for example, if I took a standard lot and I lost 20 pips, I lost $200. On the next move coming up, I would do a double lot to make up for that move. Then if it goes up 10, 20 pips, I make my money back plus some. So a lot of traders do that, But what happens if you enter in another trade with a double lot and it goes against you again? And then you get stopped out. Now you're compounding your losses, and that's revenge trading. So you're just trying to immediately get back what you lost. And the market fakes you out. That's what they do all the time. Oil is dropping. So oil is continuing with hitting the lows. But try not to do that, guys. Try to stop that. So like after the call, guys, I always give targets after the call. If US30 closes above here, okay, I want to see 33,738, 740 up here. It could continue to come up, close above that 200 EMA above here, and do something similar to what DAX is doing. So DAX moved all the way from here to that red line. That is a take profit. If I was in a DAX trade and I bought that, my stop loss was down here, and it came directly right up to that red line, I would be 100% maybe taking out some profit out of the market up there. That's about almost 20 pips. Okay, and it came directly right to the red line. Yeah, you got to accept losses are part of trading, but the risk management is everything. I'm trading a little smaller this session because I'm waiting more for New York. So waiting for the bigger session. I haven't risked a lot in my account, so I'm happy about that because I could have gone bigger sizing and then I could have been in trouble. But so going forward, watch for some buys, closure above here. Normally after the call we get some nice moves. I tend to see that. And then if we break below here, again, that could be a possible sell opportunity. Like US30 is not going to stay in this channel all day today. It's gonna move out of here, similar to what like DAX did over here. So when it comes to that red line, you see how it came up and it got rejected and coming down. So where did I get that red line from? I came right over here. And I identified it exactly right here. So that shouldn't be a surprise. I came right up to that red line and got rejected. And gold, again, I know gold sucks right now. But if we just clean up the charts again, it builds to get up there. Could look again for buys above that area, 2016-17. But it's got to pick up more liquidity, more volume down here to come up there and break. Oil is breaking down. Okay, remember this could be a big demand pool of buyers in there. If it comes back down in here again, this is what's creating that bullish divergence. You see this low and a new lower low. See how it's coming down, but the strength is increasing. So if it taps in here, this could be that good buy area. that big daily area with the bullish divergence approaching on the lower time frames and coming right back in this oversold pool. So this is where could be a good buying opportunity for oil inside here. Would you re-enter in a selling down? No, nothing to trade in here. See how it's just right in the middle of this consolidation box is real choppy. I would not be looking to sell or buy anywhere in here. Wait for something above here, wait for something below here. Okay, guys, I'm going to wrap it up. I'm going to go get a coffee. I'm so tired. I stayed up too late watching that basketball game. I just want to get a coffee, and so I can come back strong for New York with the team, and then a little small break for me, and then FOMC. So it's a long day, and then we also have our webinar later on with Carlos. So I'll be co-hosting that with him as well. So it's an extremely long day. So guys, thank you guys for joining, everybody. For the rest of the week, we'll do these London sessions on YouTube, but going forward next week, I might change it up, to give us maybe some better volume to trade. We tried pre-London last week. It wasn't the greatest. We tried London this week. Some days are good, some days are not. This is typical London volume. I think it's more impacted. The market is waiting for FOMC, in my opinion. We'll probably get the same type of volume on Friday morning as well when we have NFP coming in New York. Maybe next week we'll do something else. So that's why on YouTube, guys, if you subscribe, hit that notifications, and then every Sunday we release a schedule. You might see some post New York, like around 11, 12, like noon Eastern time, where we might come on YouTube and do some trading in there and see if we can get more views at that time of the day. And that's more where I'm like more fresh at that time. It's in the afternoon because like this time I'm really tired. Normally I like to get up for London and do top-down analysis. That's the main objective of why I get up, is to do top-down analysis. I don't trade as much in London as I used to. I trade with you guys, but normally if it's just by myself, kind of get up for London real quick, do some top-down analysis, and then I go right back to sleep, see how London's moving. But today was tough, okay? A lot of fake outs everywhere. A lot of fake outs to the highs, fake outs to the lows. So you got to be very careful trading. Yeah, I'm leading it. Like, look, everything was faked out of the high. A lot of fake outs. That one faked out to the low. Fake outs to the highs. Okay, even gold. Kind of, we got in there. It's pushing a little bit, but it was kind of like a fake out to the high. Came up there and got rejected. Fake out to the lows. So a lot of fake outs all day today. The only thing that was decently moving was oil. And GBP USD is, unfortunately, it's not doing much either. So I think we just have no volume in the market right now. I think everything is waiting for Wall Street. Okay, guys, so thank you guys so much. Appreciate everyone on YouTube. Thank you guys for the likes, subscribes, and everyone on Zoom. I will get some rest. I'll see you guys in a little bit. 7:30. I'll shoot the Zoom session in the channel. And guys, let's continue trading. Stay positive. Okay, don't let a couple trades rattle you guys. As long as you're not trading over leveraging. You shouldn't be like I'm okay. I'm down 20 pips, but I'm ready to go to collect one more trade to go to break even today. So I have the confidence that I didn't go big Lambo lots or anything like that. Thank God. I just did some normal half lots, standard lots. Okay, and everybody, thank you guys so much. Enjoy the rest of your day. Trade safe. To everybody on YouTube, please, if you can. Today's going to be an extremely volatile day, especially at 2 p.m. Eastern. If you've never ever traded FOMC, I recommend you sit back and watch it, or use a demo account if you want to try and trade it. But watch out for a lot of fake out range moves. They're notorious for that. Maybe a little double bottom forming on GBP USD coming up here in the next 30 minutes. US30, don't sleep on it. Like, it could be coming back up, could be following something like what DAX did over here. You know, maybe while I go to Tim Hortons, I'll scalp this move up here and grab my 20 pips back. Okay, guys. So thank you guys so much. Have a good day, and we'll see you guys.
Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.